Hey, yo, what's up? What's up, everybody? Welcome, welcome. We have a great session planned for you today here. Chief Market Strategist at Miller Tabak, Matt Maley, is going to be here with us today. We're going to go over a bunch of trade ideas, setups, education. We're going to show you live trades that we've done in our live trading room, a whole bunch of stuff. You don't want to miss the session. Also, a lot about what's happening in the current events in Europe, Russia, Ukraine, how we're going to trade it, if there's something that we should trade from it based on that. So you don't want to miss this session, guys. There's a lot packed. And of course, we have a special St. Patty's special for everybody that is here today. So 30 minutes, get your stuff together, okay? Pen and paper, pay attention, because today is when you want to do that. We're opening the markets tomorrow, Monday. You want to start with a game plan. You want to know what's happening from a perspective that makes sense. So do not miss the session. We're going to have it here with Matt Maley, Chief Market Strategist, lead trader at the Benzinga Stock Picks Inner Circle chat room, where they're whipping out the most insane trades ever. Matt Maley's chat room is here with Benzinga, of course. A lot of you guys are asking me where he is. Well, I mean, he's in the chat room Monday to Friday. So chat room Monday to Friday, Matt Maley, and he also has a session on Tuesdays. But guys, I just wanted to come in here, take a quick peek, say happy St. Patty's weekend, okay? And also that we're going to start the session in 30 minutes. Do not miss it. You're going to thank me, okay? By the end of the session, there's no way that, by the end of the session, I promise that you will have a much better perspective, a much better understanding of today's current market, what's upcoming, and how to profit from it. And also how Matt does it every single day, right? Learn from the best. Matt Maley's been doing this for 40 years, Chief Market Strategist at Miller Tabak for about 14 years. Prior to that, Director at Merrill Lynch for 11 years, managing two of the biggest accounts of the damn world, Fidelity and BlackRock. Before that, he was head trader there at Salomon Brothers. If you are old enough to remember who those are, a lot of big titans came out of that spot. The hottest firm in the 90s, in the 70s, late 70s, 80s. So I don't expect a lot of you guys to know that, but you know, Matt Maley has a real OG record. Let's just get that out there, okay? Folks, so yeah, just make sure you're here in 30 minutes once we get started. Don't miss out the session. Trust me on this. You're going to thank me later. With that being said, guys, we'll see you here in about 30 minutes. Make sure you have everything ready and good to go. Pen and paper, and we'll see you. Hey, what's up, everybody? Just want to let you guys know in 15 or 60 minutes, we're going to be starting here with market strategist Matt Maley. He's a chief strategist from you guys have seen Bloomberg, CNBC TV, CNBC Asia, uh, Yahoo Finance, all around. He's all around. And he's been in Wall Street for about 40 years. 14 of those years until right now as a chief market strategist at Miller Tabak, private equity firm. And prior to that, he was a director at Merrill Lynch, where he managed two of the biggest accounts in the world, BlackRock and Fidelity. So, experience managing trading for, the biggest accounts really in the world, right? And prior to that, as well, in trading in Salomon Brothers. Salomon Brothers in the late 70s and 80s was, like the hottest firm in town. So back in that time, a lot of great traders, investors, even have connections or have friends, from there. Even people like Jamie Dimon, the CEO of Chase. So a lot of people, a lot of big people have been there through that Salomon Brothers, and but yeah, basically Matt Maley has been doing it for 40 years. So you guys have the privilege, the honor of being here with him for a live session on 3 simple ways on how we can profit during a bear market. And on top of that, we're going to be talking about trade ideas, education, setups, feedback on strategies, what's working, what's not working, current events in the market that we should be looking forward to, national and international as well. So we're going to cover everything 1 to 9. So just make sure that you're paying attention, that you engage, you participate, because there's going to be a lot of great information being thrown around here. Okay, we're going to be talking about a lot of things. So pay attention, folks. Make sure you have your pen and paper. And yes, for those that are here, current members of Stock Picks Inner Circle chat room, what's up, guys? Good to see you guys again. Great profits on the FXI trade. We're going to be talking about that one once we start here with Matt. So stick around, folks, 15 minutes, and we're going to get this thing started. All right, see you guys in a bit. All right. What's up, everybody? How we doing? Ladies and gentlemen, welcome today. Happy Sunday. Amazing, amazing day. And so many great opportunities in the market to okay, all right, we took that off. And so many great opportunities in the markets right now, guys, so that literally right now it's a great time to meet, not just because it's Sunday, but because that way we can, prepare for what's coming in this week. My name's Rodrigo. I'm going to be here with you today, and we will be here with Matt Maley, Chief Market Strategist and Deep Trader at the Benzinga Stock Picks Inner Circle chat room. We will be covering stocks, trade ideas, education, strategies, current market events, a whole lot of different things, tickers as well at the end. We're going to talk about Tesla, Bitcoin, all that stuff. And by the end of this session, okay, hear me well. By the end of this session, you will have a much better understanding of the markets right now, of what's happening, and how to be able to trade around it, even if we're in a bear market. So pay attention, guys. That way, we're going to have a much, much better session here. Without further ado, I have the honor and privilege here of bringing Chief Market Strategist here, Matt Maley. Let's go ahead and bring Mr. Matt here.
Hey, Rodrigo, how you doing? Can you hear me okay?
Matt, yeah, I can hear you okay, Matt. What an insane trade with the FXI. I just want to start off with that, okay, because it was just such an amazing winner. And yes, not all trades are like that, but it's just, just having the right mindset. It's like when these come, you take advantage of them. And we're going to cover that and some other things, but yeah, how's everything going in the chat room? How is that? How's this week in the chat for the folks?
Well, it was a great week last week. We had, and let's say every trade that we can't say that every trade that we have works out. But last week with the FXI trade, which is for those who don't know, it's the ETF for the China large cap stocks. And they had become incredibly oversold, and everybody was bearish on it, and everybody was saying they were uninvestable. JP Morgan was saying that China is uninvestable, and I took the absolute the exact opposite stand, and we bought some options in the chat room, and for those who don't know, we'll cover this as we go through it, but we put a specific trade on, saying this is the specific trade I want to buy. I want to buy call options in the FXI, the strike price, the expiration date, and we got into them. We got a little bit on the previous Friday. I actually didn't buy any that day. I said, I'm going to wait till Monday. But a couple of people in the chat bought small, and it came in on Monday and it was down again. I said, this is the time we got to buy it. That's the same day I think JP Morgan said it was uninvestable. And the market rallied 22% over the next 3 days, and we made a lot more than that buying the call option. So we'll go into more detail on it later on, but that's the kind of trade that we're really looking for. And you embrace, we've made some other trades that were in the downside in this, with this big decline we've had over the last 3 months.
Yeah.
So we'll be able to take advantage of it in both.
Really quick before we get into that, folks, a lot of you guys already probably have seen Matt Maley from CNBC, Bloomberg TV, Yahoo Finance, but just to give you a brief background here, Matt Maley's been a chief market strategist for about 14 years, director of trading at Merrill Lynch, managing Fidelity and BlackRock, and also at Salomon Brothers in the late 70s, 80s, and that was the hottest firm at the time. A lot of big traders and investors came out of there. So great pleasure to have you here, Matt. Thanks for being with us, and let's get into some of these trades, man. Let's go ahead, share the screen, pull out the Bloomberg, and let's start looking at some charts.
Okay, good. Well, let's just go. I'm going to go right in. Oops, I got to hit the share button. That would help. Hold on 1 second. We'll go back to that. Let's just get right to. Oops. Yeah, I do actually want to go back to that. Hold on. Okay, but we're going to go, and I'll open up so you can see it better. Hold on 1 second. Just let me get these. Make sure that's the right one. There we go. Okay, now see it so you can see it better. I just want to say, can you see this better now? Hopefully you can. Whoops, what did I do? Oops, see, hold on. Oops, I went the wrong way. Oh, I'm going the wrong way. Hold on. There we go. Okay, so this is we talked about not last. This is what I say last weekend's chart. Because that's when I punched out the chart. But on the day before that, on Friday, so I guess a week ago Friday, I just talked about how the FXI, which again is the large cap ETF for the for China's stock market, and it's the ADR it's traded in dollars, so it's not an exact thing to the Shenzhen index, but it actually can trade differently depending on the currencies, but it's a very good, as you can see, it follows the stock market very well, and as you can see from here, and if you see with my arrow there, you can see obviously it had done very, very poorly, but then since mid-February, it had just gotten absolutely crushed and fallen out of bed. And like I said, everybody on Wall Street was very bearish. And in fact, in the chat room, I had been saying for several months that you wanted to avoid the Alibabas of the world and the JD Uniphase, these stocks that these China stocks that were trading in ADRs here in the U.S. And I just said, no, they've got more downside to go. The Chinese government is clamping down. In fact, I said, watch what happens after the Olympics. I said, the market was going sideways here, and people saying, oh, maybe the whole thing stabilized. And I'm like, it's only stabilized because China doesn't want any problems during the Winter Olympics. As soon as they're done with that, they're going to clamp down again. And literally the Friday before the Olympics ended, they clamped down on another industry in the technology sector. And this was the food delivery service after doing so many others last year. And sure enough, it fell out of bed. So we were very, very smart to stay away from that. However, though, but when the situation changes, you got to change because things don't go down forever, just like they don't go up forever. And I said, I pointed to this RSI. Now, for those who aren't familiar with it, I'll just go very quickly, just talk about the RSI chart, which is the relative strength index. And it's a good measure to tell us when a stock or an index or an ETF, and in some cases bonds, it's any asset, any publicly traded asset, it gets overbought or oversold. And when it gets below this 30 level, it starts to get oversold. You see how here in July of last year, it got oversold, and sure enough, it rallied for a little while. Same thing down here. It rallied for about a month, okay? But this one, when it gets down to 30, that's really, really oversold, okay? And that's why we have a green line. That means, hey, buy it. Go ahead and buy it. It's more of a short-term indicator. And still, I'm very, very worried about what China's going to do over a longer term period. But I was like this is getting ridiculous. Now, when it gets up to the top end, you see how it gets overbought there, and it came down for a while. It got overbought again, then it came down pretty hard. Again, overbought here. It got to that 30, up to the 70 level. And it's a red line because that's saying stop. Don't buy anymore. Stop buying. And for those who want to make some negative bets, can do that as well. But here, it just kept getting so harder, getting sold off. And excuse me. And as you can see, not only was this reading fell to 14, 30 is a bad number. It's funny, earlier in the year, or just a month or two ago, the only thing I'd ever seen lower was Facebook, Meta. Facebook dropped its RSI dropped to 9. I'd never seen anything like that. I've rarely seen it get down to 14. And when it got down to 14, I said, okay, this is a place we gotta step in. We also looked at the Bollinger Bands chart, which I don't have right here, but what that showed, that it was trading like 3 or 4 or 5, almost 5 standard deviations below its 20-day moving average. It was just ridiculously oversold. And then I took that saying, okay, this on a technical basis is getting ripe for a bounce. But I also just took my experience over the years and know that when China, even though a lot of people saying they don't care about the stock market, they'll just let people lose money. And I'm like going, hold on a second here. They don't care about it the way the Fed has for the last 10 years, although the Fed doesn't care about it quite as much as it used to. But they certainly care about it because, well, all these guys, all the big wigs in China own stocks, whether they admit to it or not. They own stocks in Hong Kong and other places. And besides, it as a world power, if their market is crashing, that does not look good, et cetera. They had many times in the past, and certainly in the last few years, when the market got knocked out, they came in and supported it. So I came out flat out and said, market's ridiculously oversold on its RSI chart, ridiculously oversold on its Bollinger Bands chart. And even though the fundamentals don't look good, you got to look beyond the fundamentals when you want to maximize your gain for the trading. And I said, let's get in here and let's buy the call options. And of course, this is the chart that came out Monday morning. And then that's what happened the rest of the week. Huge rally. This is the updated chart. Stock, the FXI bounced. The index bounced 27% for an overall market. That is unbelievable. Well, look at this. Now, So we came in on Monday okay. We came in and we actually bought some, like I said, on we even have better returns than this, but anyway, we bought some on Friday, the previous Friday. Then I'm sorry, take it back. We bought bought some the previous Friday, and we bought some on Monday, and then at the end of the day on Tuesday, I was saying, the middle of the day on Tuesday, and it was kind of hard for me because I was actually away. I'm sorry to say I had to go to a funeral in St. Louis, but I said, I'm going to buy more here. I want to buy some more of these options now, and and literally. The next day, I'm sitting in a hotel room in St. Louis, and it's basically up 3,000%. 3,000%. And I said, let's take some profits. I said, I didn't. I said that I'm not taking all of my profits. I think I took half. We'll hold on to it. Okay. But I did say, now listen, I'm going to be away for, this personal thing I had to take, a family situation. And so keep an eye on this thing because I'm not going to be in the marketplace. So, keep together and talk to each other about this. Well, sure enough, by the end of the day, now we had bought some earlier that are even more astronomical, but I don't want to overstate it. But here, over 7,000% at the end of the day on Wednesday. So these are the types of things that don't come. It was funny because last year, we came up with one in Viacom, which we'll talk about again, where we were made 2,500%, and we thought, oh my God, and even 5,000. And I said, those only come once a year if we're lucky. Well, sure enough, it's come this year too. We've made another one.
Okay, really quick here, Matt. So basically, some people were saying in the chat that some of the calls went up 14,000 or 15,000%.
I said I didn't want to. Because sometimes people, they literally almost didn't believe it, but they literally, because we bought some the previous Friday, they literally went up 14,000%, not 140%, not 1,400%. 14.
That's just the kind of thing. That's the kind of number that you probably see like on like a Photoshop meme on Reddit or something like that, like something going up 14. No, but this is like legit. Like we actually make this in the chat room,
right?
And it's all for everybody to see there. So this last weekend, you had no idea, Matt. Like people were calling me, like members from the chat, from the live trading room. They were calling me, emailing me, like thank you, like telling me, hey man, this FXI trade. They were telling me about it. I get into the chat room and I'm seeing everybody say book 700% profits, book 800% profits, book 300. I'm like, what is going on here? And it's like, I know this happens often, but this seems to be a very standout winner because you do get home runs. Look, that's just we got to give credit where credit is due. Okay, Matt Maley gets the biggest home runs in Benzinga, like all sort of like trade alerts services. The prior one, and we can talk about this now if you want, Matt, is that Viacom put.
I just wanted to say, I don't want to be looking. It looks like I'm not paying attention. I am. I'm just looking up an email that I got on Friday, and it said. I signed up with your program with Benzinga 19 days ago. It has been the best 19 days of trading I've ever had. In the next, if the next 11 months are anything close to this trading month, my retirement will be greener than planned. Thank you for all your guidance. Have a great weekend. So I just wanted to share that with you. It's the same type of thing that I'm getting from these some of the guys that you had
people
seen,
are just very thankful, and that's the thing because. Let's just be clear about it, right? You have about 25 plus years in background of trading and like directly trading. But then on top of that, you've been doing this for 40 years. This is your career. So it's really good to have somebody who's really been doing it for a long time, taking the time to try to help retail traders. So, we all want to thank you, of course, for that. Like, I'm just letting you know a bunch of emails that I got were like, hey, like say thank you to Matt Maley. I've literally tripled my account since I joined this chat in like a month ago. So, and I know, you've been really precise with the timing. You've literally predicted every single correction live on these sessions with me. So, I'm a fan of the picks, man. I'll tell you that. I trade them too. So they're really good. And, so yeah, guys, and I'm getting some questions here. So just know we have a St. Patty's special just for today for Matt Maley's live trading. I put the link in the chat. It's 90% off St. Patty's special only. go ahead, use it, 7-day money back guarantee. But let's get back here to the trade here, because this is, some people are like, this is like life-changing money for a lot of people. I know people that made, like, I'm not going to say the user, but I know somebody that made over $100,000 in that trade with Matt from the chat room. I'm not going to say his name, but I do know one person made like that amount of money insanely on these calls. So
yeah, so that's what worked out here. And it was funny because it was, I don't know if it's March Madness or what, but we had the same thing last March, or similar thing, where it looked at Viacom. And one of the things, I guess the key thing, excuse me, Rodrigo talked about my background. I was a trader. I mean, and I'm a strategist now, but most strategists, of course, are former economists or former analysts from sector analysts or whatever, and that's fine. But that's more theoretical. I mean, I worked on the trading desk for 25 years, and again, at Solomon Brothers in the 80s and 90s for 15 years, Merrill Lynch for almost 10, so 25 years there, and I covered, some of the biggest trading desks, the biggest mutual fund, Fidelity, the biggest hedge fund, BlackRock, and several other of those, of both mutual funds and hedge funds over the years, and insurance companies, other money managers on the institutional side. And it really taught you about what, on the trading side of things, not what theoretically should happen longer term, but what is going to happen and how we're going to make money, and also how to manage positions and how to cut losses, because nobody bats 1,000. Nobody comes close to the greatest hedge fund managers in the world. Will be more than happy to tell you that they've had some bad bets that have not worked out well at all. And that's the whole idea, is managing them. Let your winners run and cut the losses on the losers. That's true of, especially in stock trading, and even and also in options trading. You can let them go a little bit more on options, but on the stock side, when I buy stock, if it goes down 10%, I get out. If I buy an option, it's a little bit different, but I get out. It doesn't mean it's a bad call. It just means my timing was wrong. I'll get out, and maybe I'll go back into it 3 weeks later or 6 months later. I like the fundamental story, but you have to look beyond the fundamentals. You have to look at not just the fundamentals, which are, of course, very, very important, but you have to look at the technicals we just talked about, and I'll talk a little bit more about here on Viacom. Look at sentiment, look at positioning, which is very, very important. I mean, that whole thing with, this whole thing with the meme stocks and the short squeezes that have taken place, they've been because of positioning. Too many people were short, and when they were able to go in and buy the stock and cause the short squeeze, that's what's happened there. And here's a situation we had this time last year in Viacom. Again, this is the weekly RSI chart, and look how every time this stock over the years had gotten oversold, above that 70 level, it sold off. Here, you can see here, again, sold off. Look how when it got incredibly oversold, it was a great. But look at this thing. I mean, it got up into the 90s. It's ridiculous how overbought it was. And it was like people there was a big short interest in the stock. I was like, okay, wait a minute now. I mean, Viacom's a great company. Now they're called Paramount now, or Paramount. I'm not Paramount anyway. They've changed the name, but they've changed the symbol too. But that's Viacom, Paramount, CBS, etc. This is what happened. And I was just like, wait a minute, these guys, if they're not going to invent the cure for cancer, they're not going to invent replacement for the iPhone. I don't care how good the company is. This is ridiculous. We have to buy the puts here. And sure enough, it literally caught it right on the right thing. The stock came down, and again, we made 2,500% on the options. Some people made, and other people made 5,000. They held on a little bit longer. Theoretically, you could have made up to 12,000%. If you held on for another day or two. I was just like, okay, that's, we'd made 5,000. That's plenty for me. We don't want to get greedy. But the whole point is that these are the types of things we're constantly looked for. This made absolutely, no sense whatsoever. And the same thing with what we talked about in the China market. It's like, I knew why it was going down. I mean, they were talking about delisting all these stocks. Not only was, obviously everybody was talking about how China was clamping down on their companies. But then they had the US saying they were going to delist their stocks. They washed out. I knew that China would come in and support their market. They people accuse the U.S. of doing that every once in a while. The conspiracy theories out there and such. They have done that. I mean, obviously the QE program we did in 2020, that was a form of manipulation, but they came in to save the system when the pandemic could basically ground the the economy to a complete halt. But they're more blatant. They just come right out and they came out and supported it with words. And frankly, I'm sure the PBOC, the federal, basically their central bank, came in and bought stocks to push it back up. And sure enough, the market rallied 23% in just 4 days. It's one thing when you get a meme stock rallied 24%. When an entire market rallies 24%, that's a big move. But again, if you're just looking at the fundamentals, like JP Morgan was,
right,
you were saying it's uninvestable, completely avoid it. We looked at the whole picture and were able to take advantage of it.
And so where are you posting these trades, like this FXI trade? And I know you're a big, well, I mean, you're trading the Qs recently, just for now, but like, where are you posting these trades and picks, entries, exits?
Yeah, we do it. So what we have, the chat is going through all day long, and this chat room doesn't have 10,000 people in it. So we know who everybody is. You're not, you hear about these things about people pumping, and they get some hedge fund guy in there, and they claim they're just a yokel guy, doesn't know what he's doing, and he's in the middle of nowhere, someplace in the country, and then starts. But what he really is a hedge fund guy trying to pump up a stock so that he can dump his, pump and dump, pump the stock up so they can sell their shares at a profit. We don't do that, and I certainly don't do that. I mean, all my trades when they take place. I post them in the chat, but of course the chat's just scrolling all day long, so it's impossible. I mean, you won't if people do things. They go get lunch. They go to the bathroom. They have their jobs. They have things to do. So we have another page, very easy. Just click on it, and any changes in the that we're doing. I mentioned, hey, today I'm buying the QQQ calls or the QQQ puts. Today we're going to buy, and so what I'll talk about them in advance, and then when I do, I was like, okay, now we're going to buy this put or this. Here's the stock or the ETF, whatever it happen to be. This is the strike price we want to buy the option at, and this is the expiration date we're going to use. And we put it right in there as soon as we make that decision. And then when we want to get out and take the profit, or in some, take the loss. Sometimes like, hey, this is working, let's get out. Nobody bats 1,000. Like I said, we want to be batting 700 or 800, and then let that 800 all those hits run, and the losses, let's just cut them loose.
Right.
So it's right in both things, right in the scrolling chat that's on, and then within literally a second, 5 seconds, I've posted. I just copy paste and posted in the page that has all our trades in it.
Okay, and so entries and exits are all posted. Everything that you need to know, strike price, expiration, all that stuff. It's very simple. I use it myself to trade. So to be honest, I always have a window open with the chat of Matt. And I'm just always seeing what Matt is talking about, if he's bullish or if he's bearish on the, as far as like what we're trading for the day, buying calls on the Qs or puts, or, shorting oil, whatever. Like there's always things that Matt is trading, but these are always high conviction trades. These are the highest conviction trades that, Matt has, right? Really in the chat room. So I was talking to this person last week, Matt, literally on Friday, right after this whole FXI, piñata of just money there, right? You guys are doing. And he was telling me that his job, he does stuff like with computers and things like that, so laptops. So he has a window open just with the chat room as well, just like I do. And he literally made, with that FXI trade, he made enough so that he was able to pretty much, put in his 2 weeks. And, I guess, he's pretty much going to be a full-time trader with all this stuff following you. And you made that happen for him, which was really his goal, his dream, of really, being able to become a full-time trader. And really that trade, the FXI, just made it for him. He recently joined. So yeah, all that stuff is really good, especially when it's so simple to follow, clear entries, clear exits. And I mean, this is all from your experience in trading. I'm getting, right? Like how can you, because you have really good timing with the market. I'm just curious, how does that come with time, experience, or?
Well, it's a number of different things that are used now, and I also will say that, and this one we'll talk about in a minute here about the faking it in both directions, because in this kind of volatility we have right now, that's what you want to be able to do. But I've also say that there have been some great bets on that have been put in by people who are on the chat room that it wasn't my idea. We don't went on Snapchat where it was, they're just about to report earnings. And a couple of people on the chat really like the put options. and they asked me about my opinion on it. And I was looking at the charts and the things, and I said, this looks like a really good play. I'm not quite confident enough to make the play myself, but I can understand why you want to. Well, they did, and they made 500% when the stock dropped 20. The stock dropped 25% the next day. Their put options went up 500%. And I was like, I'm kicking myself for not having. It's just because I agree with them, but I didn't act. Sometimes you want to, not going to punch yourself. But so those are the things too. I just want to talk about that. It's not just my ideas. That people are constantly talking about some fabulous ideas every single day, and we're helping each other make money. Now, the other thing is that is so important right now, which is so great, is that we have the tools to take advantage of this stuff in both directions. I mean, back, if you went back 5 years ago, and we didn't have all these options and all these, we did have them, but they weren't as liquid. Today, they're all liquid. You go back to the crisis, the financial crisis, or when the dot-com bubble was burst back in 2000. The individual traders didn't have weekly options like we have. If you want to buy the FXIs, you would have to go out. First of all, the FXI ETF didn't exist. There weren't any ETFs. But if let's say you wanted to buy something on Apple, like, oh my gosh, I think Apple's going to, is way overbought like it was in 2000. And I want to buy some puts. Well, that's great, but you had to go out 3 months because they only had quarterly options. And that there's a time value priced to those, that gets very expensive. But if you really think the thing is going to come down on a short-term basis, and you want to be, you can have the time and wherewithal to be a more active trader. Now you only have to go out. You only have to go a couple of days. I mean, each week they have an expiration. Every Friday they have options and
right.
expire. And in the index ETFs like this one here I have up on the screen is from the QQQs. They expire 3 times a week: Monday, Wednesday, Friday. So we have the opportunity. And the thing is too, is that we have them, not only that, is that they're very liquid and they trade very well. Again, the old days, you had 2 ways to do it. You had to go options that are way out, or sell something short. Selling something short is very, very dicey because, and I've said this a million times, you buy a stock at 20 and it goes to 0, you lose 100% of your money. Okay, that sucks, but you lose 100% of your money. You short a stock at 20 and it goes above 40, you lose more than 100%. You owe them money. All right, so that's that. But now we have the tools to play, and they also have inverse ETFs leveraged into ETFs, which are very much trading tools. And I want to be very adamant about this every time. They're they're trading tools, not long-term management tools. Regular ETFs can be long-term players, but not the leveraged ones. But the point is, we have tools and we can really make these trades.
I really was not aware of that sort of I mean, the way that you do it, really, that you're using these, the Qs and the other leveraged ones with the calls and the puts on short-term expiration. And that's really why you're getting these 14,000% winners, because, you're just never going to do that buying and holding. That's just never going to happen. So it really is the only avenue you have if you do want to make that sort of money, right? And doing it on a daily basis with the right timing does make sense. It's way better than buying and holding, which is just sitting on the sidelines. In your case, you embrace the volatility. You pretty much embrace it and you trade around it. And that's really the most important thing. And all right, Matt, so we have a couple of questions here. Glenford saying, okay, that's what I needed. I've been selecting trades that didn't have high probabilities and lost money. Yeah, Glenford, the chat would be, the live trading room is going to be great for you. We have a session on Tuesdays at 11:30 Eastern just for chat members too. Mary is asking, does Matt help out with current trades we're in? What do you say, Matt?
Yes, I mean, people have you say, listen, this wasn't your idea, Matt, but what do you think? I own this stock or I own this option. Maybe a put or call, whatever. What do you think? Now, and there are some times where I'm always going to be honest. It's like sometimes it's just like, I don't know. I don't know the stock, the fundamentals that well. I can't know all 5,000 stocks out there.
Like if they talk to you about a penny stock or something like that.
Yeah, exactly. And then, or it may be the technicals on the stock. I mean, like it's completely neutral. I don't have an opinion. Is it the fundamentals I don't know, or the fundamentals I do. I like it, but the technicals are really, really neutral. And I don't have a compelling opinion right now. If that's the case, I'm just going to tell. I'm not going to say. Some people feel like they have to say something because they're asked a question. It's like you usually, to be honest with you, between fundamental, technical, and sentiment, and other positioning things, you can usually give some sort of an idea. And so usually I do. I'll give an opinion. I mean, like for instance on Intel a couple of weeks ago, I was just saying how this is a stock everybody should be buying a small amount in every month. I'm talking real small. At some point, it's going to become an unbelievable buy. And the reason for that is that because of what's going on with China and Taiwan, we have to move chip manufacturing back into the U.S. The government is going to back them. Intel is now building a thing. It takes 2 years, though. In Ohio, they just started building. But some companies are too big to fail. They're not only too big to fail, they're too big not to succeed. We need them to succeed. So in other words, the government's going to give them contracts. They are going to succeed. Now, this is going to be like Microsoft, the big turnaround. Intel was a dominant company. They've fallen on tougher times. I mean, it's not like they're going out of business or anything. And they're going to I think they'll make the same kind of comeback as I have with Microsoft. Complete dominant company, kind of became more of a mediocre one. In the last 10 years, it's back up to being one of the premier tech companies in the world. I think Intel will do that because the government, no other chip company can do that, can build. I mean, Advanced Micro Devices is a great company, but they don't have the capacity to manufacture chips the way Intel can. So these are the types of things that we talk about. But anytime somebody's got something where I've got a position, I've owned it for a long time, I've owned it for a couple of days, whatever. What do you think, Matt? I'm more than happy to give the best answer. And I will say, though, sometimes I don't have a good answer because it's just kind of a neutral playing, but I'll try to say, hey, at least on the technical side, if it breaks above here, that's going to be good. If it breaks down below here, it's going to be real bad. Keep an eye on that type of thing.
Right. So basically, just to clarify this, guys, what Matt, because if there's a couple of people, if you're new, Matt is buying calls and puts, right, short term, near expiration, close near term expiration, and trading the volatility. So having the chat room open is a huge thing because the market is not on your schedule. It's not on my schedule. The market has its own schedule. It's up to you if you really want to trade around that volatility, because those are the people that make the most money, flat out. So yeah, guys, we do have a 7-day money back guarantee. I'm getting a lot of questions about this, Matt, so I'm just going to get it out of the way. Live trading room basically with Matt all day. He's there Monday to Friday, and all you guys, if you have questions about picks, questions about strategies, you can ask him. He's going to be providing trade ideas and setups regularly throughout the day. I'd say at least two, 3 a day. Sometimes it's more, because if the market is volatile and it's moving up and down consistently, and Matt has a high conviction, what he does is that instead of selling the calls, maybe he might add, and then the next day you get that big run higher. So Matt already has the conviction, the research on the trades. He's looking at the charts all day. He's been doing this for 40 years. So trust me, if you're starting out, this is who you want, literally, providing you with trade ideas, setups, education, all that sort of stuff, because there's really no other way, put simply, that you can make, like consistently, right, throughout the week, 50, 70, 100, 200% on the volatility with the, it has to be this way, right? So
we're embracing the volatility. I mean, don't get me wrong. There should be a bucket of money that you have that's in that long-term thing where you buy that Intel, you buy the Apple computer, and you have, and then the money's there. You can trade around a position, if you have X amount of dollars and you want to, I want to pare that back because it's getting overbought, but I'm going to still keep a nice core position, and I'll maybe 2 months from now I'll go back into it, whatever that might be. Or maybe it's just in your 401k where you're just putting money, every month, every month or every year, and it just, that's what you want to do. But if you have that other bucket where you can really maximize the returns, and that's what we're working on here. Although from time to time, I'll talk about a thing like this Intel play. This is definitely a more long-term call than a short-term call. But the whole idea is that we're trying to, the thing is, we're going through what, there's a big change in the marketplace right now, and this volatility is going to stay with us. It's not just a Russia situation with this Russia-Ukraine war. I mean, the volatility had already picked up dramatically in recent months before Russia invaded Ukraine. It's because the Fed has changed. The Fed has significantly changed their strategy or their policy from one of the most accommodative in history by a long shot. And they've gone straight instead of stopping at neutral, they're going straight to tightening. And they're basically now wound down their QE program, which is basically ending right now. Of course, they raised rates this week. They're going to they're going to continue to raise rates, as they said, close to 6 times this year. And people say, well, they probably won't do it that much. Well, that's not good. That's not bullish, because the only reason they would do less than 6 is if the market got hit. Okay, at the markets, plural, especially the fixed income markets. It's one of the biggest misnomers out there in the marketplace, that the Fed saw what was going on in the stock market in 2018 and pivoted on the policy and shifted. That had nothing to do with it. They were fine. The stock market was down 12% on December 15th in 2018, and they still raised rates. It wasn't until 2 weeks later, when the credit markets started freezing up, especially the high yield market started getting clobbered. That's when they pivoted. Not because they weren't worried about the stock market, and they're not worried about it this time around. Don't get me wrong. There is still a safety net. There's still the Fed put. It's just much lower than it used to be. And I think that's going to be closer to 20% or even more on the S&P, which means it's probably close to 30 on the NASDAQ. Doesn't mean it'll happen right away. And that's why we're going to be able to make money in both directions. And like we did this past week in the FXI, we're call options, not put options, even though I'm worried about the market overall. It's call options, because no matter what, the worst bear markets in history, and I don't think we're going to have a repeat of 2000 or 2008, but even those had very sharp rallies. And this one we saw last week might last a longer. We'll have to see, and I'll talk about that before we're done here today. But here's a situation here, just at the very end of in February here, just a month ago. Now again, these 14,000, 5,000% moves, we don't get those very often at all, but we do get them, and we want to be able to take advantage of them. Now here's one, of course, with the I'm sorry, I should have written here, but it's the QQQ February 25th, $330 put options. Okay. Now this is when the Fed was coming in for Chairman Powell, what he was going to be talking about, more specific, because they've been talking about, hey, they are going to go ahead and march. They are going to start paring back their balance sheet earlier than we expected. This is something other members of the Fed have been saying, the Fed chairman was like, well, what's he going to say? Is it going to be good? Is it going to be bad? Well, the market was holding up better than I thought. So as we came into the meeting, I said, watch out here. Everybody thinks this is priced in and stuff. I don't think so. So at 1 o'clock or 1:30 actually, and the announcement was supposed to come at 2. I said, let's buy these put options. And sure enough, they started to rise. And then at 2:30. They came back in at 2:30 is when he actually gave his press conference, and the markets got hit. These put options took off. By the next morning, before the opening, they were up almost 400%. And I said, I'm selling these options right after the market opens. Okay, and sure enough, we made 400%. Okay, 2 days.
Yeah, I want to give a quick.
Go ahead.
No, never mind. Go ahead.
No, then the very next day, 2 days later, the market sold off. And I said, well, wait a minute. The market's it's sold off too much. We're going in. This is, we're going to go in and we're going to go ahead and buy the call options, because I think that this market's oversold. It's going to bounce back in front of the weekend. And sure enough, we bought the call options in the morning, sold them that day. Yeah. And you can see here for a 300% gain. Okay, in that day, we didn't even go to the next day. So you can see how with this kind of volatility, if you embrace it and don't fear it, you can really make some good money. Again, not everyone works. Last week I bought some QQQ puts after the market had rallied up, and I thought at the end of the week it would probably come down, and they didn't. So we lost some money there, but certainly more than made up for it in the FXI call. So
just want to give a quick shout out here to Nasa Terry Gray. Shout out, welcome to the family Stock Picks Inner Circle live trading room. Welcome. It's the newest family member there in the chat room. Welcome.
Great to have you aboard. Thank you very much. And I think you really enjoyed here. But again, we're going back to, I just wanted to, one thing I think was a good thing. One thing we're talking about, hey, we've had all these great gains. Well, let's look a little bit about how we get some of these gains. And there's one little stock. Now, this one, this is more of a longer term picture. I'd say not longer term, but this is going to be an intermediate term play. And this is Salesforce.com. CRM is the symbol. Okay. And this is one that I think people should be buying the stock right here, the stock, not the options. Okay. And here's where I use a couple of different things. Now, number one, we do need to note that even though the valuation has come down, it's not cheap. It's trading at 46 times earnings. That's a lot cheaper than it was when it was like 66 times earnings just a couple of months ago when the stock, it was up here at the end of last year. But again, it's long term. Some of these tech stocks, they're still willing to pay that premium in valuation. But what I'm looking at right now is I like buying the stock, because what I'm going to do is, you see, look at the 200-week moving average. 200-week. This is going back, a half dozen years. Every time it got down to its 200-week moving average, it bounced strongly. Okay, this for several months, this one for several years, this one for several years, etc. Okay, and we've got right down to it again. Again, we can always go a little bit below it. That's okay. When you break a support or resistance level, it frequently does that just by a small amount. You always want to make sure it's a meaningful break before you, a meaningful break to the upside before you get overly bullish. Meaningful break to the downside when you get overly bearish. It's not just moving averages. It's any kind of support or resistance level, certain patterns, head and shoulders patterns and things. But this one bounced, so it's already bounced strongly off it last week at that big rally. That's fine. But you can see, again, the RSI. So then you look at that. So, okay, it bought off the 200. That's really good. Okay. Also look at the RSI. This is a weekly RSI, relative strength index. Remember, we talked about that. When it gets down to 30, and look what happened. Each time it got down to or near 30, it was followed by a nice long-term rally. So again, these are weekly charts, so they're even more compelling. Okay, and sure enough, we got down to that same level that we saw 3 other times in the last half dozen years, and it's starting to move up. And so that's really bullish. Now, so what I'm saying now is that people can buy the stock, even though we've missed a little bit of the move. That's okay, because you missed a little bit of the move here. Look how much further it rallied. I don't worry about that. Okay, so what we buy this stock, and you use that 200-week moving average as your stop out level when you're buying just the stock, not the options, because that is sure enough, that 200-week moving average is about 10% below where it's trading right now. So if it gets below that, and we're gonna take out, we'd get out of the position. However, if the stock continues to rally, well, we've already bought some here, right? We're going to buy some here, right? This is one of my ideas for literally tomorrow morning. And here we are is what's called the MACD chart. Now, what the heck is the MACD chart? That is a momentum-based stock. It doesn't. It tells you when a stock has gained or started to lose or started to gain some momentum. And so it doesn't. It doesn't get the exact top or the exact bottom, but it tells you that, hey, that top is something of a meaningful top, or that bottom is a meaningful one. And what it does, you get these crosses. And what it is when the 9-day exponential moving average crosses above or below the 12-day exponential moving average. It's kind of like the death cross you hear about a lot, the death cross or the golden cross, when it's the 50-day moving average crossing below the 200-day moving average, that's a death cross. When the 50-day moving average crosses above the 200-day moving average, that's a golden cross, and it's usually very bullish. Here for the MACD, it's much shorter term because it's just 9 and 12 days. But again, when they crossed negatively, that usually, sure enough, look what happened here. The sell-off continued. Even here, the sell-off continued. When you see a positive, we'll see how a positive cross there, and it continued higher. See the positive cross here. You always got to be careful. See, it was like these one, remember I just talked about, make sure they're meaningful breaks, not slight breaks, because these were a little bit of head fakes. But when we finally got the meaningful one, sure enough, this rally took place. And this is just starting to curl up, barely starting to see it. It's starting to curl up. So what we're going to do is we're going to buy some now. The continues to rally. We'll buy even a little bit more. And if then we get the positive cross, then we can get more aggressive. And you say, well, why don't I just buy it all now? I was like, well, we don't know for sure if it's going to get that way. It's just, again, you don't want to be guessing here. We're making educated decisions, not just wild guesses, educated decisions. Right. And think about it this way too. If we buy the stock now at $218 and it goes up to $225, and then we finally get the cross at 200 and 240, whatever. So it was saying, so the stock will be at $250 and our average price will be $225, $230, okay? Well, so now you're basically guaranteed that you can't lose, All right. So you put a stop order. Instead of putting it 10% below the market, you move it up to your average cost. It's like, so the worst thing that can happen is I get out flat. I mean, again, every once in a while, something could gap lower and you lose a little bit of money. But especially a stock like this, it's in the Dow average. This is not going to, they're suddenly going to wake up and they're going to be insolvent. This is going to be a stock. But see the thinking there is that when people buy things on the way down, it's okay if you buy something at 218 and buy a little bit more at 217. But if it goes down a bunch, why average down? All you're doing is just adding to a losing position. So you buy it at 218, 250, and suddenly it's trading at 200 and your average price is 210. Just to get back to even, you've got to hope. You've got to hope it bounces. That hope is not a strategy. If you buy it chase it a little bit on the way up, you've got the stocks at 250 and your average is 230. Now you're like, okay, if it gets down to 230, I'm going to sell it. But if it keeps going up, I'm just going to keep raising my stop order, my limit, my stop level. And so that I'll now at some point it'll be like, okay, now it's at 300. My stop level's at 280. I'm guaranteed to make money. So again, it's this risk management, trading management ways, and it's very counterintuitive. A lot of people say, "Oh, geez, I wish I'd bought it all at 218." Well, we all wish we could, but you're never going to get the exact bottom, never going to get the exact top. When you do, once in a while, when you do, you're lucky. I mean, for that 14,000% trade, I mean, if you got the absolute bottom and the absolute top, you made 14,200. I don't think the guys that made 14,000% are really disappointed they missed that last little 200. No, so the point is that risk management it's so many people are taught buy down, buy on weakness, buy. Boy, if you loved it at 20, you ought to love it at even love it even more at 15. That's actually not a good trading play. On the long-term thing, if you really believe in the company, you work there, you really understand it, you really believe in it, that's fine. I can understand that, especially when you're in a bear market and stocks gets thrown out with the bathwater. But on a trading basis, that's not the game you want to play.
And let's just keep in mind, guys, the live trading room with Matt is for trading. However, you can ask Matt, hey, Matt, what's a good company with a good amount of free cash flow, good operating margin? You could chop it down with Matt. It's not, but however, as expected, people want to make the most amount of money in the least amount of time. And that's why we're doing weekly calls, weekly puts, because that's how you have to do it. You cannot make these kind of numbers buying and holding or just buying a stock. You have to trade the options to do this, right? And also not only that, right? Because you have to also need to time it correctly. But I'll tell you something, man. 114,000% trade for me does it, man. Like I would probably sit back, go vacation, send Matt, a nice gift card for his favorite wine store. I don't know what, and yeah, man, I would just be chilling after that trade, man. But yeah, you keep going every day, Monday to Friday, 9 to 5. Obviously this is in your DNA, stocks and trading and all this stuff, right? So it's really like, because I mean, you obviously have, your things where you go on CNBC, Bloomberg, chief market strategist, you're busy, right? But this is really your way to connect with retail traders, to help retail traders. And it's just been helpful because from a lot of the things from my experience, when I started trading, there really wasn't much out there for us new traders besides a whole bunch of pump and dump chat rooms when they just started getting popular, So
yeah,
this is a totally different experience.
And one of the sayings for our chat room is there's no such thing as a stupid question. If you're new, I mean, some people what they do is they run they either do very 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 small trades, or even run a paper portfolio, and that's just in other words, writing instead of actually buying it, writing it down. To me, the best way to do is actually put a little money, put a little skin in the game, but don't jump in, with both feet. If you've never traded options, do it very very small, just by 1 or 2 options or and such, and really get to learn. That's really the best way to learn. But don't be afraid to ask questions. There's so many things in this business that are counterintuitive, number one. But number two, they're really not that complicated is once you're exposed to them. And it's not like, oh my gosh, I got to study this for 10 hours to figure it out. No, it's just, oh, okay, I never thought of it that way. And you learn, it's a great way to learn. And I guess the point is all of us on the chat, no matter how much experience we have, we were all on that beginner stage at one point. And we do know that, hey, there's some things that sound really stupid, and they're not. And so the point is, no such thing as a stupid question. Don't be afraid to ask them. We're more, everybody's more than happy to answer. I mean, I do it all the time, and there are other people on the chat. I mean, who will come. I mean, as I said, I was in St. Louis for 2 days. I wasn't on the chat quite as much as I wanted to be, but I was still on it quite a bit. And the people are helping each other out. They'll look at the site. And, people were talking about they had their TD Ameritrade thing. I don't use TD Ameritrade, but so I couldn't answer the question. They're no, use this. And it was just talking about tools that they were using, how to get the VIX options up. I didn't know how to get the VIX options up on the TD Ameritrade, and people in the chat room just help the person out, and he or she was able to he and she were able to get those going. And so we're all in there trying to help each other all day long, and it's fun. It's
yeah. And I'm trying to do the math here. I'm trying to do the math, Matt. So let's say I would have put $500 on that FXI trade. What is 14,000% of $500? Like, how much would that be? I'm just trying to work the numbers here. How much would somebody make, even if something as small as like $100, right? How much would that really be for someone?
Well, I mean, just do the math. I mean, it's like, that's 10 times. What's that? To 100 times your money. So, that's $50,000. You're doing okay. So, it's just it's a unique trade. I mean, I just say, I don't want to get people to say, next week we're going to have another one of those. But the point is, in these kind of volatility, there's so much volatility in the market that we're getting a lot more of big trades. Okay, we're getting where these, when the market's just kind of moving here and there, and we go into earnings season, and suddenly these stocks see these huge moves. But those are harder to predict, because you have no idea unless you have inside information. And I don't play in that game. And if I had, I wouldn't use it. And I don't get it. Nobody gives me inside information. So, and again, but when a stock is really, really oversold or really, really overbought on a technical basis, you can go ahead and try to make the play, make an educated guess. Other than like, hey, geez, I went by Apple Store. It was pretty crowded the other day. I'm going to buy some call options right before their earnings. They may report good earnings, but it may already be priced in. So here it would be like, okay, Apple Computers is incredibly overbought. They're about to report earnings. If they're good earnings, they're already priced in. If they're bad earnings, the stock's going to get killed. So maybe I'll take what we call lottery tickets, where we just spend a small amount of money we can afford to lose. Or at least, we can lose half it, because if they report good earnings, stocks can go up, the puts are going to go down. Okay, I don't mind losing that money. It's not a big deal. But what I'm willing to do is take a lottery ticket, because the odds are in the favor. And if it's up, it's going to be up 500%. And suddenly I take, maybe I just bet $100 on it. Suddenly I've got $500. And now I can make a $500 bet on something that's got, again, more of a chance for other reasons. But we do these lottery tickets late in the week. And what it is these ones where you buy them just before the expiration. So they're really, really cheap, because there's no time value put into the options trade. And boy, if you get those, you got to be careful, because people, they get 2 or 3 of them, and suddenly they say, "Oh, great, I'm gonna bet the farm that this stock's gonna move 5% tomorrow." That's not very smart. But you can put a little bit into it and make some nice money, and then that gathers, builds up a nice little kitty, so that when you get a really good idea like the FXI or like those QQQs that I was talking about earlier, and for those who don't know, the QQQ is the NASDAQ 100 ETF. It's the 100 top stocks in the NASDAQ, really filled with the big cap tech names. And so those are the types of things that we play in. A couple of weeks ago, we did Chevron. I was too early on that, and we lost some money for a while, but we made it back. And again, because oil got ridiculously overbought, ridiculously overloved, this positioning was all on the long side. And I said, this stock has got to come down. It took a little bit longer, but we finally made some money on that one too. So these are the types of things. And I'm bullish on oil long term, very, very bullish. And I was one of the first guys to turn bullish on it way back in October 2020. Everybody else got, on the Wall Street came in late. But the point is, just because the fundamentals look really, really good doesn't move in a straight line. I'm going to go back to my Bloomberg here and just show you something that's okay. Bang. Okay, this is my live memory. Those are just, but look at this. Look at this. Is a very simple chart of Apple. What kind of a year did we have in Apple last year, right? Apple, equity, GP, bang. Okay, unbelievable year for the stock market last year. We only had one correction of 5%. What even a correction? One pullback of 5%, right? So Apple, one of the best companies in the world, right? Well, of course, that went straight up too, right? Because the stock market went straight up. We had never had any pullbacks. So Apple must not have had any pullbacks either, right? 18% pullback there. Bang. 8% pullback there. Boom. 11% pullback there. And then, of course, this year we had, at the beginning of the year, we've had a couple of pullbacks. And so 12%. And again, go on and on, okay? So even this great company with great prospects, I mean, just oozing cash, more free cash flow than you'll ever need, and yet it still can see these kinds of big corrections. And so that's why we use technical analysis to try to capture these things. Look at this stock here. I mean, again, it got ridiculously overbought. So look to buy the puts. It got forget about these lines here. These are the moving averages. I'll just take them off so it just doesn't look too busy. But see, again, overbought, got way overbought, okay? It still went to a higher high, but on a short-term basis, that became a great opportunity to buy some put options in the stock. And maybe only hold them for a couple of days because this is Apple. We're not betting that Apple's going to go to $10. But you can make the trade. And gosh, at Tesla, I mean, we'll talk about what I think about Tesla right now, but I had a thing last year, and I was saying, people need to be careful about Tesla. One of the people in the chat really thought I was absolutely nuts, and I said, how could you think that Tesla cannot go down and go back to $1,000, given how many times it's fallen a zillion percent? In the last 10 years, it's had a 20% correction is nothing for this stock. It happens all the time. Guy thought I was crazy. And I said, not only could it go below, go down to 1,000, I think it could go down to his 200-day moving average. He thought I was out of my mind. I'm like, I am not. And again, I said at the time, this is right back in here. You can see, remember this RSI chart. Look how overbought it got. I was like, I'm not making a comment about Tesla, the company, long term. I'm not saying Elon Musk is genius. I'm like, I'm not saying he's not. I think he's a genius too. He's unbelievable. But look at how overbought the stock is, number one. Look how many times it's seen corrections of 20 to 60%. And you're trying to tell me it can't see it ever again? That doesn't make any sense. And so we played this and made some real nice. We played this one really well. We've gotten this in a couple of different directions, buying and selling. But again, if you embrace the volatility, last year in 2021, it was all one direction. You just when you got every little dip, you bought it, and you bought calls, and you make a lot of money. This year, now again, if there was a few stocks, the meme stocks, GameStop and AMC and some of these other names that saw these big moves. But here, now you've got all these stocks seeing big moves, and they're also very liquid stocks. Apple, Tesla, Nvidia, Microsoft. Another one where we've done make some nice money in the options of this stock, etc. You see these moves; they don't seem like huge moves, and they're not. And so again, we're not going to make 14,000% in a Microsoft. Well, we could if they really get sold off. But that 11% move right there, I guarantee you, the options went up well over 100% in just a few days. And so these are the types of things that we're constantly looking at when we're in the chat room and trading.
Right. And so volatility is your best friend, right? A lot of people are scared of volatility, right? And they just rather either stay out or buy and hold. Which,
and that's that's fine if that's what you want to do. I'm just saying if you have the inclination to try to maximize those returns, this volatility is exactly what you want. All these hedge fund guys, they love volatility. They obviously sometimes they get caught on the wrong side of it and get burned. But especially, it's just that
that's where the money's made.
Exactly. You should have that bucket over the side. You should have that bucket over the side with that long-term and that should be a bigger bucket than your trading bucket. But when you have that trading bucket, you can maximize those returns. You're going to have some losses. Every trader who's ever traded has had losses. But the net you want to be on the winning side. And of course, for me, you get a couple of 100 or 200% moves, and suddenly, the cost of the subscription is paid for within, in a very short time frame, and everything else is gravy. So that's what we're trying to do. But the point is that the volatility, and again, going back to what I was saying earlier, I strongly believe the volatility we're having now is going to continue. Will we have bouts where things calm down? Especially once we get into the summer. Probably. I mean, we will certainly get somewhere a couple of weeks where things calm down, and that's why sometimes the best thing to do is do nothing. I always say, don't just sit there, do something. Well, actually, sometimes it's don't just do something, sit there, and then I've told people to do that every once in a while. Especially, it's like, hey, this stock looks really neutral. If it breaks this level, it's going to be really positive. If it breaks this level down here, it's going to be really negative. Let's wait and see which way it goes. We don't have to act right now. Let's hold off. That's what we'll do sometimes. Sometimes it'll be relatively quiet. I mean, suddenly you're getting the first week of July. That's a classic one, because the end of the quarter happens June 30th. Then you have the 4th of July holiday, and earnings announcements haven't come out yet. And there's usually nothing going on. And so that's, why force it? Why try? You can't make things happen. You have to read the market, see what it's telling us, and take advantage of it. And if things quiet down, like again, once in a while, you'll see something big in July. I remember back in when that first Brexit thing took place. It took place right around that time. The market stayed volatile. That usually doesn't happen. That's usually a week where people can just kind of, literally can shut off their machines and go away for a week. But I never do. I always keep an eye on it, but I tend to trade very, very lightly that week, if at all. But the point is that
Right.
There's a lot more opportunities now because of what the Fed is doing. The Fed is making a significant change in policy, and this is going to create a serious headwind for the stock market. We have high inflation. That's going to create headwinds. And that's going to, again, but for long-term investors, it becomes a very stressful time. For short-term traders, it becomes an unbelievable time of opportunity.
Paradise. Okay. So, all right, I get that. And that makes absolute sense, right? So that's why being in the chat room is so important. Rosalind is asking, how can one become a member? I put the link there in the chat. A lot of you guys are already familiar with Matt, but basically, yes, he's doing this all day. So now that we're talking about volatility, Matt, there's a couple of items that eyeballs are on, right? You have the situation in Russia, which continues to escalate, and you have the situation with interest rates, inflation, and you also have the fact that we just passed another 1.5 trillion package with foreign aid and a whole bunch of stuff. So everybody seems to be on the same direction. That I just hear a lot of people on TV and CNBC, all these places that hey, they wouldn't be surprised if the market drops another 20%. Are you on that camp, or do you think that we fully bottomed out? Could it get worse with any of these things that are happening that people are concerned about?
I think the odds of things getting worse are very high. It may not happen. This coming week is going to be a very, very interesting week. I've been bearish on the market, and we made some real nice calls, made some nice money especially the index ETFs this year. This week is going to be a really important week. We'll probably pull back a little bit because we rallied so strongly last week on Monday, and that won't be a big deal. But if we get some upside, it doesn't have to happen Monday or Tuesday, as long as the market doesn't roll over in a major way. If the market can rally a little bit more, we might get, this rally might last for, into the end of the quarter, which is just 2 weeks away. And then we'll take another look. However, if it rolls right back over, it's going to get, it's going to get hit pretty hard again. And we're at a key technical juncture. I won't go too much into the details, but last week, a lot of that, what happened was called positive gamma, where people who wrote options, a lot of people had bought put options and they were hedged. The problem is the people the brokers who sold those options, they have to hedge themselves. So they went out and shorted the S&P 500 to hedge those puts or the NASDAQ. And then, of course, when the people came in and said, oh, my gosh, those puts aren't working, sold their puts, Here comes my dog. That caused forced buying. So it wasn't really, that, oh my gosh, something had changed. What really changed last week? Yes, oil did come down a little bit further. Hello, buddy. He's my dog there, Samson. Oil came down a little bit, but it had already come down the week before. And we got some talk about peace talks. Okay, that's fine. But interest rates moved higher. Inflation numbers look worse. The Fed was more hawkish, not less hawkish in their conversations and in their actions. Their actions were raising basis points, but they said, no, we're going to do 6 more times. We're going to start shrinking our balance sheet. All this stuff was bearish. What's going on in Russia? I think Putin is done. But it's not going to happen tomorrow. It may not happen for a year, but it's sure not happen. He still seems to be firmly in power. I don't pretend to be an expert on geopolitics, but I've always followed it closely, and I follow it even more closely now. Listen to people who are experts, and they all say he's not giving in because, first of all, every time a guy has shown the kind of weakness that their military has shown, they get pushed out. So I worry that he's going to step it up even more. Number one. But number two, he's between a rock and a hard place. Even China's starting to back away. They're like, hey, this doesn't look good. We don't. And so it's like, oh, well, that's good. Therefore, he'll give in. Well, maybe it gets him. He's like a cornered dog, and he comes out, even harder. But the point is, the real issue is that what the Fed did with the major liquidity program, the QE program, they started in March of 2020 with the depth of the pandemic, pushed the market way above its underlying fundamentals, way above. It was 22 times earnings on the S&P 500, much more on the Russell 2000 and the NASDAQ. And so even if the economy holds up, okay, the stock market would have to come down because it was just steroids. The Fed, they did the right thing. The economy was completely freezing down. In the summer of 2020, everybody knew, okay, we know the stock market is way above where the fundamentals, but the Fed's holding it up there so that the economy can catch back up. Once it reopens, it'll catch back up, and we'll be back back in. Well, that was fine. The problem is once we got past the emergency in the economy, they kept the emergency level of liquidity. So when the gap started like this and it started getting up, but then all of a sudden they just instead of lowering they just kept going. So the stock market never came close to catching up. It caught up a little bit in the first couple months. In the second half of 2020 and early 2021, the economy did play catch up because it'd been so far, basically shut down. But the problem is it didn't, if all you have to do is look at the valuations, whether it be price times sales, GDP to market cap, and the PE ratio, the multiple, are all the second most expensive ever. And people are mistaking all that liquidity, all those steroids with brains, and that's it really went up because I'm really smart. That's why the stock went up, and the stocks went up. And the reason really was because the Fed provided all the stimulus to these banks. The banks had to do something with that stimulus, and they loaned it out a little bit, but nowhere near as much as a lot of people thought they would. Instead, they put it into assets. The assets went higher. They had leverage because the market went up in a straight line. They kept adding leverage, and when that leverage that helps their I'm going to show you this thing here. That helps their leverage. That helps the supply demand equation shift to demand because people are adding leverage. So even though they're spending a certain amount of money, okay, it's providing more demand because they are leveraging it. Instead of buying the $1,000, they're putting in $1,000, but they're actually buying $1,500 worth of stock. And so that skewed things to the other way. The problem is, as we can see, the margin debt is a great. Margin debt is a great. Oh gosh darn it, is a great indicator of the amount of leverage. Here we go. Sorry, the amount of leverage in the system. As we can see, the margin debt got crazy in 1999, 2000, when that debt finally started, when that leverage started coming down, the market got hit hard. Same thing happened in 2007 during the housing bubble. Everybody got too confident. Same thing happened in 2018. That wasn't a major crash. crash like these two were, but it was a 19% correction in the stock market because that leverage needed to be unwound. And the thing is when the addition of leverage is very bullish, and people were saying, "Oh, well, leverage is getting too high." It's like, well, it won't be a problem until it comes down. Well, guess what? It's starting to come down. Well, this is the end of January. You know, it's come down further since then. We just don't have the numbers on it yet. We should be getting them soon, actually. And this is coming down. It's going to lead to another a pullback in the marketplace. But as we all know, and even in the worst bear markets in history, markets don't, in either direction, 2021, the market did kind of go up in a straight line. But usually, the market, it does seem some fits and starts on the way up, and it certainly sees that even in the worst bear markets. I mean, you go back to 2000 and when the tech bubble burst. Oops. 1999. Sorry here. Okay. So the worst bear markets in history, of course, when the tech bubble crashed. But look at what happened in the middle. It didn't go straight down, okay? You had nice little bounces here that were, that was 7 or 8%. That was 8% there. This one here. This one lasted several weeks, 19%. 19%. This one here. Again, well, obviously you can tell it's more than 15%. My fingers got stuck there. But you can see these big rallies. That 20%. I'm going to go redo this one because it was an unbelievable rally, and that's what I'm trying to figure out now. Is this one of these rallies that's going to last a couple of weeks and go up? This whole market went down 50%. And I'm not looking for a 50% correction. I don't think we're in this major catastrophic bear market, but we're in one that I think will go down 20% or more in the S&P, and we will get these kind of bounces along the way. The same thing happened in 2018. Let's take advantage of those. Too many people on Wall Street, they're paid to be bullish. That's what their job is, okay? Thankfully, I work with Miller Tabak. We're on the chief market strategist. They say, just tell them what you think. That's all they care about. Tell them what you think. Other places where they have, a certain amount of money under management, they're like, if you're the strategist at a big mutual fund, they pay you to be bullish because they want people to keep their money in the market. If you're at a brokerage firm, same thing. And one time I was approached by a very big money manager in New York, as for a strategist job. They had several strategists, and the person flat out said, well, the job isn't really to do strategy. It's to convince people to keep their money in the market when things get tough. And I'm like, well, that's not really what I do. I'm into telling people the truth. And again, don't worry, the stock market usually goes up. So it's not like they're just slime balls or anything like that, because over time, they'll be right. The stock market over time goes higher. So, but for trading purposes, these guys were, there's a couple of people saying, oh, what a great call last week that so-and-so made when he said the market was going to go up. It's like, well, he's been making the same call for 4 or 5 months. He's been wrong for 4 or 5 months, and finally it bounced back. And they're saying it's absolute bottom. The market's going to skyrocket from here. I don't see how that can happen, given that the Fed has completely changed their stance, and the market is still expensive. We're still at 20 times earnings. When a lot of people saying, something, war is usually good for the market. And I'm like, usually you get an initial downpull and then the market rallies. Yeah, but almost all of those cases, it's because the market was really cheap, not expensive like it is now. Okay. And when that sell-off before the war took place, it sold off enough to make the market cheap. That hasn't happened this time. The market's still expensive. So this is going to be great, I think, for volatility to continue. Again, I don't want to get too overly bearish here, because the next 3 or 4 days are going to be very, very important to how the next several weeks go. And I may have to switch more to a much more bullish side, but that won't be very, very long, because I do think that, again, these no matter what happens in Eastern Europe, we have a significant change in what the Fed is done. And well, two other things before I'm sorry to ramble here, but number one, no matter what happens in Russia, what the Fed is doing is going to create too many headwinds. But number two, we're also seeing the economy slow down. We saw, and therefore earnings are going to have to come down. Goldman Sachs was looking for 4.4% GDP growth in 2022 back in early October. Now they're looking for 1.75. Okay, and the Atlanta Fed is looking for 0.5. I mean, how do you get earnings growth with 0.5 GDP growth? You don't. So therefore, the market's actually even more expensive. When we get through the next earnings season in April, a lot of earnings estimates are going to come down. And that doesn't mean we're going into recession, although I think we could. But the economy is slowing. When the economy slows in an expensive stock market, that's not good. The last thing I just want to mention, but again, but a lot of people are talking about, oh, this is probably the bottom. It's the bottom, or we might have to retest the bottom. And they're all saying, why? Because this is exactly what happens. The market goes down a certain amount, and valuations come down a certain amount, and therefore, and that's happened this time. So therefore, the market has to bounce. Well, I'm like, yeah, but those other times in 2020, 2018, 2009, even 2011, those big corrections, okay, took the market to a very oversold condition. Despite what some pundits tried to say on TV last week, the market is not oversold. You look at the RSI charts, they were not anywhere near as oversold as they were any of those times, whether it be the RSI or Bollinger Bands charts or stochastics, et cetera. Also, valuation levels. They in 2000 and 2018, 2020 and 2018, the S&P dropped to 14 times earnings. The lowest we got here was 18 and a half times earnings. These stocks are not cheap. The big thing is that, I guess the biggest thing though is that people need to remember, usually, sometimes bear markets or deep corrections just fizzle out. But usually there's a new positive development that helps it bottom. Okay, it doesn't just fizzle out. I mean, I know that's what the textbooks say. Sometimes they just fizzle out. That did happen in 1933, and after the Great Depression, or the Great Crash in 1929 and the Great Depression. But what happened in 2018? The Fed pivoted. They went from raising interest rates over many different times to suddenly putting on the brakes, screeching the brakes, and reversing and starting to ease. Okay, in 2020, the market was coming down because of the pandemic. The Fed came in and with massive levels of liquidity flooding into the system. That was the thing that held it. In 2009, which a lot of people don't realize, is that what really changed, the Fed was behind the scenes was flying billions of dollars of liquidity into the system, and the market kept going lower because we were in a major crisis and the banks were in big trouble. The only thing that really changed, it changed the week it happened. In March of 2009, they finally changed the rules on mark to market for what these banks, for the assets they held. And so they didn't have to put up the collateral anymore. They changed the rules. That's what bottomed the market. There was a key new development. We're not going to get something from the Fed. The Fed is not going to immediately pivot because inflation is too high. Okay. And you say, well, geez, they could completely do, an emergency QE program. Well, that's fine, but they ain't doing that now. They're not going to do that when the market's down 35% like it was in 2020. So that the fact that they might do that isn't something to be thrilled about. Okay. The one thing we could get Putin to give in and just say, okay, I'll take a few provinces and everything will be fine. That will give us a short term, but we'll still have the Fed, we'll still have an expensive market and a Fed doing, taking away liquidity, tightening. But the point is, both Putin, and which is great for us, what Putin's going to do over the next several months, in my opinion, is, I want to talk a little bit. No, I'm going to bomb the hell out of him. And so go back and forth. And we're going to get these big moves in the market. The Fed, they're going to go in and say, okay, we want to do 50 basis points because they want to get people a little bit scared. So that when they do, that's what they did. They knew when the war started that they couldn't go 50 basis points, but they still kept it out there because they wanted people's expectations. So when they came in and said, no, it's going to be 25 a week before they did it, it's like, oh, thank goodness. Okay, we feel much better. And so they play these games of expectations, and that will continue to create big swings in the marketplace. It's going to happen out of Putin. It's going to happen out of the Fed. And we are going to be able to take advantage of those because now we have the tools to do that, which we did that only the institutions had in 2008 and 2009. Only the institutions had in 2000, and we had them in 2018. And again, that wasn't as big a decline, but it was a 19% correction. But these tools weren't as liquid as they are today. And so, and again, I keep saying that this is working to the downside, but as I just saw on the FXI, it works to the upside as well.
Yeah, it's just a little bit concerning seeing what's happening there in Russia, with like these accusations of, chemical or
Oh,
just, advanced weapons, things like that. And you have, I mean, the last time I heard like a US president talk about like war crimes and genocide was like Saddam Hussein. That was the last time I heard that kind of chat and rhetoric. And, if it's happening there with Russia, because Russia doesn't want them to be part of NATO, but Ukraine is like, they're trying to figure it out, but it's like we're already supplying them with like weapons and things like that. So really, this if this takes a nasty turn, Matt, do you really think that the market is? Do you think it's going to rally? Because I mean, you were saying like as soon as the war starts, like you got to buy when the first bullet is shot, and that already happened, right? We're way
yeah,
past that. They're all over Ukraine.
and
Yeah. So
we took advantage of that. But if this thing ratchets up again, when the thing is, usually the stock market sells off in a serious way because that's the only going into the war, because that's the only reason
I
why
mean the volatility. Yeah, so like you trade the volatility. So I'm asking you because this is really the moneymaker for you, right? The volatility. Obviously, it's bad. We don't want bad things to happen in the world,
oh
but
God,
this is really when the hugest gains come in the market.
absolutely, and Putin. I mean, again, it's like when oil back in 1991, the first Gulf War came along, and oil went sky high, and it took us, we my wife's family's from Dover, Delaware, and they have the Dover Air Force Base there. We go down to visit, and there was just these huge, I've never seen planes so big, huge cargo planes taking off one after another after another, and they were all going over to set up for the Desert Storm, and and the markets went down, 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 down. The only reason the market went down is because they were worried about the war. As soon as the war started, and oil went through the roof, and then as soon as the war started, the market started rallying, oil started coming down, and then when we realized that the war was over in 2 weeks, the market just went all the way back up. Oil came all the way back down, dropped 40%, and gave back everything everything it gained. That's not going to happen this time. And why? Because oil was already up. It's already up 40. I mean, if it drops to $80, if oil drops to $80, it's still going to be 40% higher than it was this time last year. Okay, inflation is still going to be a problem. The stock market going down at the beginning of the year had nothing to do with Russia or Ukraine. It had to do with the Fed and concerns over the Fed tightening. Okay, so in other words, oil sure it can sell off, and it's already obviously come off its top. And like I said, we called that right at 130. I was pounding on the table. We got this is way overbought, way overloved, and it came down. We made some money with the puts on that. Again, I was a little early, so we lost some early on, and then we were able to make it back, and then some after that. But the point is, if oil comes down, it maybe it goes to 80. Maybe it goes to 80. Like I said, that's still going to be 40% higher than last year. The stock market is not going to gain back everything it lost. All right. So that could be a short-term positive thing, but it's not going to be. So the point is, the longer this drags out, and if Putin gets put into a guy, if he uses gas or whatever, that's
But
forget about
but
nukes.
like I mean, because he's sanctioned to the whole right now, but like I think oil is the only revenue. It's like the main thing they have, so that really is like his way
Oh
of
yeah.
making money because he's sanctioned everywhere.
Oh yeah. I mean, and some people absolutely have to have his oil and his gas, and so he won't get completely shut down. But then again, of course, if he didn't have that, he would never have invaded. But he obviously badly miscalculated here. And people are saying, well, he's going to get pushed out. Again, I'm not a geopolitical expert, but I think that's very good chance of that happening. But it's not going to happen tomorrow. And this could go on for a while. And therefore, all these inflation issues are going to be with us for all that time. And it's going to be, I lived through I was a teenager, but I mean, in junior high and high school, I would live through the 1970s. I remember how bad that inflation was. And even if it doesn't get that bad, it makes a big difference because of people. And I spent this whole thing with food. The food thing is over. Forget it. Okay. This year, food prices are going to go up. They're going to rise more, and they're going to stay up throughout the entire year. If something gets settled on tomorrow, okay, oil will come back down, maybe down to $80. It'll still be high, but it'll be a lot lower than it had been. Food prices won't do that. Why? Because all the people in the Northern Hemisphere, Europe, and first of all, they've already basically missed the planting season in Ukraine. They're not going to be able to bounce back enough to plant the kind of grains and stuff that they had in the past. And here in the U.S. and in Europe, anywhere in the Northern Hemisphere, the fertilizer prices have gone through the roof. It's going, I mean, 6-7 times what they were last year. They've already bought their fertilizer. They've already bought it. They've already spent that money. So they have to raise prices because they have to start planting soon. If oil goes back down before the summer driving season, that's going to be positive. Okay. It doesn't matter if fertilizer prices are so much higher because natural gas is very important to making fertilizer. That's already been bought. Forget it. The food prices have to be higher. It doesn't matter if fertilizer prices go down because they're not going to buy fertilizer again until next winter when they go for the following planting season. It's food prices, and people sit there and go, "Are we going to go?" Remember, we used to go to Cape Cod for 3 weekends each year. Well, this year we're only going 1 because you know something, we don't have that much savings, and putting food on our table now costs 3 times what it did last year, and we got to make sure that we.
So you're saying Are you saying there's going to be a food shordage, or?
Well,
there could be a food shortage.
There's going to be a food. If this continues, there's going to be a food shortage. But more importantly is that these because fertilizer prices, again, if fertilizer prices are a lot cheaper in June, it won't matter. It will for the drivers. If oil prices are lower, it won't mean a damn thing because they have already have used the fertilizer to plant their crops. Their crops are planted. I mean, they can't start replanting them in June. Okay, that doesn't do them any good. They won't grow. They have to plant them in the next month or so, and they've already bought the fertilizer. So they won't buy any more fertilizer in June because they won't be planting. They won't be using it. So food prices are going to stay high, and whether that really creates shortages or not, again, massive shortages, I don't see that. I just say it's going to be a lot more expensive, and there's a lot of people in this country who live paycheck to paycheck. They have very little savings, and if they have to, if they have to pay a lot more to put the food on their table for their children, they're going to have to pull back on other things. Everybody says, "Oh, geez, there's all this money in savings, and there's got the 401ks and all." That's fine, and maybe that goes into the market. But there's millions of people in this country that live paycheck to paycheck, and they're going to cut back on things. This just is. This just happens.
Oh. Yeah, so I mean, there's definitely, I feel like everything, right? But there's always consequences to the actions that we make. So all these sanctions and everything might have an impact on us, right, if this continues. But are you at all concerned about the semiconductor chip and the whole China-Taiwan thing? Is that something that is on investors' minds and on the institutional side? What are your thoughts on that, Matt?
Oh, no question. I mean, the thing is that we have the situation with Taiwan. Taiwan is the biggest producer. I mean, we import 28% of our chips from Taiwan, and we don't make them in any kind of significant way here in the U.S. And as I mentioned earlier, Intel is going to start doing that, so that'll turn around. But that takes 2 years to put out the first chip, much less try to really ramp up in a major way. Now, what kind of impact does this thing in Russia and Ukraine have on the odds that China will try to invade Taiwan? That's hard to say. I mean, initially people were saying it's going to be much higher. Now they're saying maybe it's lower because Russia's military has done so poorly. Now, China's military is not going to be as poorly suited. But the point is that President Xi in China sees that unprovoked what the world how the world has reacted to this unprovoked invasion. And if he does something similar to Taiwan, that's even though they claim it's part of their own country, it's still that's going to hurt. If the rest of the world reacts anywhere near the way they have to the Russian invasion, it probably keeps him on the sidelines. However, this whole thing with this whole supply chain issue is only getting worse. We knew, we say, oh, it's going to get better. It's going to get better. They said, but even at the beginning of this year, before the Russia-Ukraine war, people are saying this is going to last through the year, probably into next year. Well, now Russia, Ukraine makes even more, prolongs it even more. Not only that, it's not just Intel. A lot of countries are going, we can't deal with this anymore. We've got to pull all those supply chains. We have them all over the world. I mean, we're getting it. We have the globalization of the economy. People are pulling on their horns. We got for the chips, Intel, we've got to start making our own things here. Germany saying we've got to rely on other sources other than Russia for our oil and our gas. All these countries are doing the same thing. They want to pull stuff in. So what does that do? Well, you have to pay people more money in the U.S. to produce these products, and that means the prices are going to go up. That means inflation is going to stay high, or at least, again, it is going to come down from its highs of this quarter at some point, but it's not going back down. It's not going back down to the 2% level that the Fed has as their target. And if you look at the Treasury, you're looking for 3.5% for the next 5 years.
Okay, so we have a CPI print next week, right? Is it next week?
Let's see. I don't think. Hold on, let me just pull it up.
Because I'm gonna bet that we go to 10%. I'm gonna bet 10% CPI.
Yeah, that's not for a couple of weeks. That's not next week. I know that. But I'm just looking at. It's not on there. But yeah, I mean, and the other thing too is that you look at these. I mean, people. You're trying to tell me, I mean, I don't know about you, but you go to the grocery store, and I'm paying a heck of a lot more than when the last number was 7%. I'm paying more than 7% for my groceries, for our groceries.
Right.
And, but I mean, all of that is that they don't really even include rent and housing prices in those numbers. And we all know anybody who's paying rent or anybody who's trying to buy a new house, those have shot up way more than 7%. I mean, please. And so.
What about gas? Does it include gas?
Yeah. Well, yeah. So then they have what they call core insurance, which takes out food and energy. And I always kind of laugh and say, why would they give you the CPI and then they get CPI X food and energy. I'm like, which they call the core inflation. I'm like, why would you take out food and energy? Because that's the one thing everybody has to have. But whatever. But either way, those numbers are in it. But one of the biggest rate, right? People used to talk about college and how college has gone up so much, but housing prices and rental prices have skyrocketed. They are not included in that data, and which shows that the real numbers are much higher. And I hate to say it, but the reason they do that, they always understate inflation. I hate to say it, because if they call the COLA, COLA, which is the basically you adjust for pension funds or for what call it pension funds and for pay. People have certain contracts, and the union contracts that we're going to go up every by the level of inflation. I mean, the same thing with the Social Security. It goes up for the level of inflation. So they understate the level of inflation so they don't have to pay out these even bigger things for these pensions that they can't afford anyway. And they don't want to have to pay the real inflation numbers. So they get understated, and it means that people are going to be hurting more and they're going to have less money. And of course, you just talk about the generational thing. I mean, back in the 1950s, middle class America, the mother stayed home, and there was, believe me, a big job, but they didn't make a paycheck, but they could still live a middle class lifestyle. Now the middle class has both people working, and that's the only way they can keep their heads above water. And again, that whole inflation thing is stated is worse than it's stated, simply because most households have two working people now instead of just one. And like I said, some of these issues that they don't put in there because they don't want to have to pay the pension fund and other things, increases that they are contracted to pay. I mean, certain government contracts, it's like, yeah, we'll pay you X amount of dollars every year, and then it will go up every 5 years by the level of inflation. Well, they don't keep up with inflation.
Yeah, and I even think that inflation was calculated differently, like in the early 70s before the CPI. Like it was, and then they changed it so that it wouldn't show that much inflation, basically to show that they're not ripping us off as much with their terrible, worst money management skills ever 5-year-old management skills. The debt ceiling always keeps rising. We have to print more money to pay that damn debt. It's like I feel these are little children with like that can't manage money. It's some. I mean, sorry about this, man, but just it's
Yeah.
always the same thing with the stuff. It's like they don't know how to manage money at all. So,
No, there's no.
I don't have really high expectations of them.
Now, and I just looking at this debt, and I was saying, it says Turkey, who's one of the countries that is acting as a go-between, says Kyiv and Moscow closer on major points. So hopefully that'll help the market do a little bit better. But we did have that big rise last week. But then, of course, the next couple of ones are not. The next couple of headlines are not as good. But Russia using hypersonic weapons, etc. But so we'll just.
Yeah, I mean, so it's all in the headlines. So that's so Russia, the attacks, the weapons they're using. That's on the headlines on every. I mean, it's a clear concern for investors and traders, right? So, I mean, but my question is like, what else can we see, right? The market already kind of fell what it fell. Like, I mean, what more can Russia do? It's like, I mean, if they drop a nuke, then yeah, like I get the market free falling, but I don't know what else could really bring the market down that Russia hasn't done already. They already invaded the whole place, right? They just haven't gotten to Kyiv, from what I understand.
Yeah. They're just looking at some of the details this morning. They've had a disaster in Kyiv, but they, and the thing is, Putin's got to do something. He can't, this has been a really, really, really bad showing for his military. He's look much, much weaker than they had been. Now, I just want to say something we showed earlier. This is the weekly chart on the, I get rid of this. The weekly chart on the S&P 500 going back a couple of years. Remember when I talked about this here? Look how oversold the S&P got in 2020. Look, it got right down to that line there. It's nowhere near as oversold here. Okay, and it's bouncing back. It's trying to get above. That's the 50-week moving average. This is the 200-week moving average. But these are the types of things that people were talking about, that the market was out. One guy saying was outlandishly or massively oversold. Massively oversold. That's massively oversold. Okay, yeah. Okay, that's not massively oversold. Not even close. It's not even oversold. It's just So I don't want to overstate some of these things. The market, last week's action was good. When you get that kind of rally over the last 3 or 4 days, you do tend to see more upside follow through at some point. Again, we'll probably have some sideways move early on Monday and Tuesday. If it can rally further, then maybe we will rally into the end of the quarter. But the core issues that we're facing is going to keep volatility high, in my opinion. And the Fed, without the Fed's liquidity, which has basically been with us during the behind the scenes in front of since 2009, is no longer there. And like I said, we're not getting that one event that really turned things around. We are getting what I think is a dead cat bounce or a bear market rally, and provide a good opportunity for people to raise a little cash and put some more defensive positions on. And the volatility I think will continue before as we move through the year. So again, but like I said, if things look good next week, we're going to take advantage of to the upside. So with that trading portion of our portfolio, we can play it on either way with these short term. And again, on the index options, they expire 3 times a week: Monday, Wednesday, Friday. So if we just think we're going to get, let's say, I don't have this thing right now, but I have done it in the past. I showed you a couple of trades where we flipped it from puts to calls just within a few days. But you could look for, maybe the market pulls back a little bit on Monday and Tuesday to digest the gains, and then we get another rise higher. So what I'm going to be looking at early next week, if we get a severe pullback or severe reversal, that's going to be negative. I'm going to play it on the bearish side. If it's just a quiet sideways move, that'll be kind of just something that'd be bullish on telling us that it's kind of a sideways called sideways correction. And then I'd look to buy, maybe Wednesday, look to buy calls on some of these index ETFs for just 2 days. To buy them on Wednesday for the Friday's expiration, and make some nice scalps there. But scalps a little action there. So that's what we're looking at. But I'm going to be playing on both sides. In here, okay, let's just go. Well, most of this where we were playing on the bearish side. I'm going to go, but now we want to be nimble until we get a clear idea of what the next important move is going to be, because we just got a death cross here in the S&P 500. That's usually negative. Now we got a death cross here that didn't work at all. In fact, it came right at the bottom, right? So, well, then the death cross doesn't mean anything. No, the only reason why the death cross didn't cause problems there is because the Fed came in with a massive QE program. Okay. Now they're doing just the opposite. They're going to QT program. Okay. So the last time we had a real death cross was here in 2018. And see what happened with the stock market. It got hit pretty hard. And the same thing is true if you went back further in time. The key is we don't have that stuff, that new development that we got in 2020, that we got in 2018 with the pivot, that we got in 2009 with the mark-to-market situation, to really kind of to really create the buying power and create the confidence that would be give us a lasting rally like we did on each one of those occasions. This one, I think, will be. I just don't know yet whether it's going to last. It's going to follow through and last for a couple more weeks, or if it rolls back over immediately next week. We'll see what happens. And so we'll play it by. We'll let the market tell us what's going to do. It's like I said, we're at a key technical juncture. We're going to stay nimble, and we'll see what we do next.
Yeah, and I want to give a shout out here to Kat and West. Shout out, folks. Newest members, welcome to the family here. As you can see, Matt Maley chops it down, and he is, 100% transparent, honest with thoughts, trades. That's really the core of really what sets Matt Maley apart. Mary says, Matt really is at his best at this. What sets him apart is his thoroughness and how he looks at the whole picture. He also keeps it objective. So yeah, there are some things. Look, you can spend 5-10 years trying to find the perfect golden strategy and all this stuff, and as you start out, or you could just trade with somebody that's actually pulling in these gains, that's been doing it for 40 plus years. That's really, you cannot buy that sort of experience. You cannot buy 4 decades in Wall Street. Unfortunately, that's just not out there in the market. The closest thing you can do is to trade with someone like that, which is what you do in Matt Maley's live trading room. So we have a St. Patty special, 90% off just till midnight, guys. A couple more hours here. And it's pretty much covering everything with Matt: live trading, entries, exits, just like you're seeing here. He also has a session on Tuesdays. Can you tell us a little bit about the session on Tuesdays, and what do you do there with the members?
Yeah, the thing on the Tuesday Zoom chat, when we do it at 11:30 Eastern time every Tuesday, and I try to make it a combination, because one of the real big things that we really try to work on is educational, not just to give you the picks and say, buy this thing here. Well, why am I buying it? Or when you ask me about an idea or an existing position, why do you like it or not like it? But when you want to be an educational thing, there's so many, like I said earlier, so many different things that seem to be counterintuitive in the marketplace. You want to know what, why you're doing it, so you can do it on your own. I mean, that's the whole idea, is to get people comfortable with doing it. But this gives you, the chat room gives you somebody like me who's been doing it for a long time, and a group of other people who are also playing off one another. That's a good idea, that's a bad idea, or just saying, this is what I think, and so it's a real educational thing. But on this Tuesday call, I try to go through certain issues, try to do a little tutorial at the beginning. We haven't done as much tutorial this year in the last month or so, because there's been so much going on on the marketplace. I've tended to go right to the what's going on and the ideas that we're playing that day, or that week. And I do it on Tuesdays, because you usually you want to get into the week and see how the week's really forming, which will be perfect this week, because it may take us a day or two to figure out how the week's going to play out. And then but at the same time, I don't want to go too late in the week, because then you want to know how we want to, it's kind of too late to take advantage of some of the situations that are taking place. Last week I had to do it on Thursday because I was away again for that funeral. So when I can't do it, like I couldn't do it this past Tuesday, I don't just cancel it. We shift it to another time. But that's what we do. So we start off with kind of a tutorial. Maybe we'll talk about technical analysis, or one aspect of technical analysis. This past week we actually did it at the end. We talked about why I look at certain options, how far out of the money, the timing, the expiration, and we talked about how we did that. We're going to do that again this week. Talk a little bit further about that, and then we talk about the macro themes that we're seeing, and then the specific stock ideas and opportunities in the place.
Yeah, the main thing why I like listening to your take, Matt, is because look, when I started trading, I made several mistakes, man. I'm going to be honest. One of them was looking at CNBC and trading what they were talking about, and it's just really, these are not actionable trade. I swear to God, man, these are not actionable trade ideas, right? I only made one time money with them when they were like talking about Kodak at 6 in the morning, and like I went in there at $5. But anyways, for the most part, these are just quick pumps, quick dumps. I feel. So I don't really trust a lot of what I see on the TV, but I do know just because of how that works and their job there, right, as it is. But so I can't. It's like a weird thing, right, where you kind of want to trust them, but it's like you're not 100% sure. Then the next day they have somebody talking short about the stock, so you don't know. But with your take, it is 100% transparent, and it's all your take, all your input, no snowflakes or sprinkles. You pretty much talk it as it is, and you trade around it. Like for example, a lot of people, including myself, I was like, I do not want to even talk or hear about any Chinese stocks. But then somehow you come in here and you're like, hey, let's buy these calls, and then they're up like 14,000% the next day. So you see opportunities where some people might not even want to see, and really that's so helpful because like even it, especially if you have a full-time job and you want to be making money in the market, the kind of money you want to make, you have to do it with options. The best thing you can do is to have this chat room open in a window or your phone. You pop up the sound notifications, and because Matt is already doing the research, Matt is already doing the grinding and all the work for you. He already has the 40 years of experience. All you have to do is follow the lead. So it's as simple as it can get. Because I know a lot of people are pretty gray. They're like, well, like I'm not, they don't give you entries or exits. They just give you like hypotheticals and what ifs. And with you, it's pretty straight to the point. And the picks are accurate. They're great. I've been trading them for over a year. With all the other things you have, the trade alerts and all these things. But the chat room is the highlight. I'm going to repost the link there. I'll tell you why the chat room is the highlight. Because when things go bad, when things go south, when the market is in free fall, you have no idea what to do. You start looking, and what do? You turn on CNBC, right? That's what most traders will do instead of really trying to find out what's happening, how to profit from it, which is what you do. And I think that that's a great approach because before I was afraid of volatility. I was like, nope, I'm out. I don't know how to do this. It never worked out when I tried to do it on my own. But you have been doing this for 40 years, so it's a totally different conversation. And I think it's just great that retail traders can take advantage of that because when the market moves so fast, that's really when you have so much money on the line and you need that professional. You need somebody that you can trust and rely on their commentaries with you and such.
Yeah, thanks. I mean, you got the people on the hosts on CNBC. I mean, they're very good. They work hard at what they do, and they ask tough questions. But the people who are on, tend to be, money managers and who have a vested interest in you staying, keeping your money in their fund and not pulling it out. And they tend to talk bullets. Oh yeah, we could go a little bit lower from here, but there's always the but. Even if they say something negative, there's always but, and then the market has to go higher. And so when they interview these money managers and these brokerage firm analysts and stuff, and they tend to be quite bullish. And it's like all you have to do is look at and I forget the exact numbers, but 2 or 3% of the buy, sell, hold, and it's way less than 10% of the companies have sell recommendations on them. That's just the way it is. It's just their job is to sell stocks, right? So really, a neutral rating is really a sell rating, and a buy rating, of course, is buy. But I mean, that just tells you how they're skewed. It's just the way
Right.
that. I mean, if you really believe, if you are a car salesperson and you really that. The Toyota is a better car, but you're selling the Volkswagen Jetta. You're selling the Volkswagen Jetta. That's what they do. They're in sales. They don't get me wrong. They give good analysis. They work very hard, but they do have a bullish bent. And the people on CNBC, they do a good job of trying to root out some of that stuff. But it's
Yeah, they
hard.
don't bring them back.
Well, the people they're talking to are paid to be bullish.
Right, and that's the thing, right? Really, why I do take a lot of seriousness to your advice because since I've been here And I'm talking literally like myself, my observation, every single correction you have predicted on time, and you have literally told all your members, raise cash so that we can buy some good positions and some good stocks, and we can make money on the way down and trade the volatility. Every single time it has worked. And every time we have a correction, it's like you're pulling out these 14,000, 7,000% gainers. And so, when I talk to thousands of traders here, from all over the world. And really, when you start looking about it, it's really not just about making good trades, but also managing risk, having a strategy, having a plan, and you have entries and exits. So you really cover all of that for them. You cover a lot of points that they would typically have to do, manage, spend time on, right? Tough if you have 9 to 5. So that's why doing all the work, it's and just giving them the trade ideas, it's really helpful. And finding the opportunities like FXI, like I said, these are, and it keeps moving, then you'll see something else that catches your attention. And I think that's great to be able to trade with someone that's been doing it for 40 years, because doing it by yourself in 2020 was, I'd say maybe easy, because everybody made money, everything went up, and you had QE through the roof, right? But then now with the aftermath and with a whole new set of risk factors, right, international too, it's really not a time to start trying to do this on your own, right? This is the time where if you want a better P&L, if you want your P&L to look better, or if you're starting and you do want to start making money in the markets, it's as simple as buying a call and buying a put. Matt's not doing spreads, verticals, condors, butterflies, none of that. We're just buying calls, buying puts. Michael is saying, what service? Yeah, it's the same live chat room. Glenford, that's why I love these sessions with Matt, so much knowledge. Shout out. Yeah, Matt's for sure. So Michael says, walk us through the daily setup, right? Like throughout the day, like if they'd be in the chat room, what should they expect?
Sure. Before I do that, I just want to say one thing, because I add on to what you said, is that when you get a market like this one, and I think it's going to be very choppy and tough for the rest of this year, at least most of the rest of this year, is that the whole idea is that so many people, if the market goes down 20% and they lose money, so they haven't raised any cash. So when you get that opportunity, the thing that made Warren Buffett a gazillionaire was because when there was blood in the streets, as the Baron de Rothschild said 200 years ago, I buy when there's blood in the streets. When he and Warren Buffett has been able to swoop in, and he's got record levels of cash. Why? Because he knows the stock market's way overvalued. And he swoops in when there's blood in the streets, when people are throwing the baby out with the bathwater because they're panicking or they're getting margin calls. Remember, I talked about that leverage issue. And then that's how he became a billionaire. Okay, he does market time. It's just very long-term market time. He doesn't pay high to get higher. He buys when things get incredibly cheap, because he knows over time they'll just go up very, very nicely. And if you raise a little cash and can make some money during these volatile times, then you have more cash to take advantage of when the baby gets thrown out with the bathwater. But more importantly, it gives you the confidence to go ahead and buy when the market's flat as back. That's very hard to do. It's like, oh my God, I've lost all this money. I've got some more money that I just got from my Christmas bonus or whatever. Should I put it into the market? It's like, hey, wait a minute, I'm fine here. The market's down 25%. I've got plenty of cash. I haven't lost any money. I've actually made money. So I'm okay to go ahead and look at Apple. Apple's way flat on its back here now. I'm going to put a bunch of money. And if it goes down a little bit, I don't have to worry about it, because I'm spending profits, not adding money that I may have to spend for my car payments. So it's make money during these times. It also adds confidence when the market does bottom, because most of those people are selling at the bottom. You'll be buying, and not only that, when the market bounces back, you'll still be buying. When they'll be saying, "Oh, I finally got a bounce. I'm finally going to sell," and they sell at the bottom, and then they sell at the first bounce, and it ends up being the worst time to sell, or you're the person who's buying at the best times to be buying. But anyway, to answer your question on the daily chat thing, so I didn't want to miss that, but it's such a key thing, I think, what's going on in the marketplace right now this year, that I just want to make sure I got that in. Anyway, on a year, on what we're doing on a day-to-day basis, we'll come in, and a lot of people are on the chat early, and because we have people overseas, et cetera. I usually get on between 8:30 and 9, depending on the day. I mean, obviously there have been days where the market was seeing a big move and I'd be on real early. 6 o'clock in the morning or whatever. But I get on usually around, between 8:30 and 9, and I go until 4:30ish. Again, these are Eastern Standard or Eastern Daylight Time numbers here in the East. It's basically when the market's open. And we'll talk about setups. We'll talk about talks about stuff from the previous day. And then we just, what I like to do is I shouldn't. We do some trades early in the morning, shortly after the opening, but not all that often. More, I like to see how the market's kind of trading and get some ideas. And sometimes, like you said, excuse me, as you said, Rodrigo, that sometimes it will be an addition. Hey, we've got this. We've got this call position. We're going to add to it. It expires next Friday. We're going to add to it because the market's dipping here, and I think this is a good part to add. Or it's moving up higher. Now I have more confidence it's going to work. Let's add to it. So I'll do those early in the morning. If I'm adding a new position, especially with all this volatility lately, where the market opens high and then sells off, or opens down and rallies, we kind of let we call the funny money. You get the orders that come in overnight that are just market orders from individual investors or from overseas investors, and you kind of have to get those out of the way. And so then as we move through the day, then we look at the different trades that we want to trade. And again, I spent a lot of time answering questions about what am I looking for here? I mean, certain levels that we're looking to break. One of the key things about technical analysis: higher highs and higher lows are positive, lower highs and lower lows are negative. And so if you see a stock, no, we don't like this stock. We don't like this stock. It opened lower this morning, but then it's rallied back. And now if it breaks below that low for 9:45 and it breaks it at 11:30, we're like, okay, this is going to be a trigger. This lower low is going to be a trigger. Let's add that put position, and let's let it just fall out of bed. That works really well. Same thing in the opposite direction, where maybe a stock opens up, but we didn't want to pull the trigger. There's too much uncertainty. Market comes back down. Suddenly at noontime, it goes up and takes out those morning highs, and we jump on the trade. Off it goes. And some people are just day traders. They close out every day. They're flat every night. I tend to be more a multi-day trader. And even in multi-weeks sometimes, and kind of, so that's kind of we do it. And
right.
Then all through the day, and then the last hour, that's kind of the power hour. We get a little bit more active. We're all doing things, but I'm definitely, if at all possible. I mean, again, last week I had a day where I couldn't, but I'm there the last hour sitting there because there's some great opportunities where really provide themselves where a stock is pushed up too far or pushed down too low, and we can kind of pick up some options trades and see the stock reverse the next day and make some nice money. So, but it's just an all day long thing. And again, people are asking questions in general stuff. People are asking questions. Last week, I got a bunch of questions on some, what do you like in terms of dividend paying stocks that for the long-term account? We talked about that. So it's just a mishmash of all sorts of different things.
That's really interesting that it's like a very flexible, because I mean, obviously, we do the weekly calls and puts because that's what makes the most money for everybody. But, there are people as well that, have a long-term portfolio and, you give them you give them stocks that they can invest and hold for long periods of time, not just trade around. And I think that's great, right? To be able to have that. And Monday to Friday, all day, all the trading hours. And I know that even when there's like CPI numbers coming out or there's high expectations of some numbers to come out, maybe you'll come in there a little bit earlier and be like, hey, if the CPI number comes out above, you did that one time and it was a killer trade, right?
Right. Yeah. The came in, this was the January, I can't remember which month, but not just most recent one, but the 2 or 3 before that, January, February, but came out at 8:30, so I was right on it, right at 8:32. Well, I might have been 8:35 because you always let the see. Sometimes it kind of does this, and then you got to figure out where it's going to settle in. But since the stock market isn't open, you can kind of sit there and let it trade for a few minutes to watch the futures trade, and then set up. Okay, this is going to be the market's not reacting the right way to this thing. As soon as the market opens, we're going to act. We're going to buy these SPY calls. We're going to buy these QQQ calls, whatever, and let them run. And so that works out well too. Yeah. So there's times where we've had I've woken up and the S&P futures are down 2% overnight. And the Dow futures are down 600 or 700 points. and I'll jump on real early. I'll jump on at 7 o'clock or earlier to discuss what's going on and why, and whether we think it's going to continue, and kind of bounce it off each other and see what we're hearing, what we're thinking. So it's and the thing is, during the day too, another thing just to point out, I'm constantly looking at other things. What's going on in the market today? The market's screaming to the upside. On Friday, it was screaming to the upside. I wasn't a big believer, but boy, the high yield market was going up too. The volume was an expiration day, so we had no idea what was going on. But the point is, what I will see sometimes, hey, the market's way down today, and yet the high yield market's acting fine. The breadth, meaning the advances decline, is actually positive. We have more stocks rising than falling. And if it wasn't for these two stocks that really have nothing to do with the overall market, the market would be fine. Hey, let's go in there and buy the calls. And we'll look at something, maybe the yield curve. Hey, the yield curve is really starting to steepen here. The bank stocks haven't reacted yet. Let's go in and buy some. It's gonna happen. These things are gonna react nice. Positive.
Right.
Let's go and buy the call options of the bank that expire on Friday, because the yield curve is starting to. Everybody looks at the 10-year yield. They think that's what the bank stocks trade on. They really trade more on the yield curve, the 2-year, 10-year spread. So I'm looking at that all day long. Again, throwing those things in. So you're trying to take all these correlations all over the place that from the
amazing.
The currency markets, the commodity markets. I mean, lumber price. One of my best calls of last year was when Home Depot was through the roof and lumber just fell out of bed. Even though lumber had a huge run, it fell out of bed, and Home Depot didn't go down. And I said, Home Depot follows lumber. We got to buy the puts in Home Depot, and that worked out really, really well. So we're looking not just at technical factors, but what are these correlations amongst different stocks and different other things that affect those stocks.
Yeah, and I'm just showing them the chat room really quick. So also this is our Trustpilot, guys, so you can see here all the reviews that we're getting. So these are the reviews from people that pretty much have tried, the chat room, all that sort of stuff. But I wanted to show you, that's Trustpilot, by the way. And then I wanted to show you here the chat room itself. So this is the chat room, because Aposti is asking what are the benefits for the members of the Inner Circle chat room. So everything that we've been going over right now, Matt is doing that with you guys every single day, giving you trade ideas, setups. I'm adding to my position, I'm cutting, I'm adding a new position. But this is the trade for the FX side, because I want you guys to see this. I know there's I wouldn't believe a lot of 14,000% trades unless I actually see it myself. Well, I'm showing it to you right now. This is the actual sell alert from Matt Maley last Wednesday. You can see right here, 10:13 a.m. It sure is hard not to take profit on the FXI calls. I'm going to sell half of my position on the March 18 $30 calls. So still riding that huge rip that it had higher and selling half of the position. So basically here you have your clear alert with the clear exit, okay? And keep in mind, we're already trading the Qs left and right here, okay? Look at this right here. I will be buying a few more FXI calls before the close. Just a lottery ticket. Well, damn, that lottery ticket gave you 14,000%, some insane move. That is, I'll take that. I will take that. So this is the chat room. I always click on open chat in new window right there in that gray button. And it just opens a full page for the chat room. And so there's two chat rooms. There's one called Matt's Important Messages, and that's where he's posting the entries, exits, FXI calls, all that stuff. That's where he's posting everything. Then the other one is called Inner Circle Chat. In that Inner Circle Chat is where everybody's posting, meaning Matt and all the other members as a community. Jack asking how long this special's for. It's 90% off. I'm telling you, this is going to be over literally by midnight, and you'll never see this price again. I promise you. It's a St. Patty's deal. So this is where everybody's talking, giving trade ideas. And Matt has other trade alerts like newsletters. So it looks like some of the people here are talking about that, because once somebody makes you 14,000%, of course, I want everything I can get from this person, right? Common sense. In this bell that you see on the left side, this is where you have the sound notifications. We just added this. So I want to give a huge shout out to Tammy as well, who's been working really hard on the chat rooms and adding all these features. Shout out Tammy. She's the lead coder there. So that's where you have all of the settings there. Of course, if you want to add your picture there, edit profile, I uploaded a picture there. I put my name there, how I want to appear. Then I click back chat. Right. So this is the moneymaker. You could have made that 14,000% just by having one window open. So if you tell me that because you have a 9 to 5 job, you can't make money trading, I don't believe it. I honestly don't, because I do too. And I've talked to a lot of people that do it as well and made money on this trade. And they just have a window open with a sound notification. If that's what it takes to make that kind of money, I will do that. Okay. What more would you want to do for that kind of trade? So this is so this is the chat room. This is what I'm showing you guys, and it's a St. Patty special, 7-day money back guarantee. Give it a shot, guys. So Harlan, yes, we recommend that you are in the chat room if you are trading, because that is, we're trading volatility, right? Volatility can change in a matter in really quick. So we're giving you those entries and those exits. Really, all you have to do is to have this chat room open. That's really all it takes. So it's a great environment. I want to highlight that one of the best things about this is the community. The people inside the chat room, I've pretty much signed up like close to everybody here, and I can tell you they're all great, amazing people, traders. They want to learn. They love Matt. They've been following Matt for a while. They love his trades. I can tell you they're making a lot of money, as you can see, and they're really happy, right? So, Matt, anything that you want to add there to the chat room on your end?
Yeah, just see on the one thing where it says Matt, I'm glad they put Matt's important messages rather than just Matt's picks, because there are some things on there where I'll say, hey, like that one. Remember, I talked about the Snapchat earlier. I didn't take it, so I moved. And I want to be able to say, hey, listen, this is one I do that people are talking about. I'm not going to make this trade, but this looks like a good one. Be aware of it. Be aware that others are making that trade, so that they have that thing. Or if it's just again, or a generalized thing saying, "Hey, listen, there's a great making something up here, but just say, J.P. Morgan is well. I'll tell you, there was a thing where it said with J.P. Morgan, if it breaks below 140, it's going to be this is going to be one you want to buy the puts. When it broke 140, again, I'm in the chat most of the day, but everybody's doing things, and I wasn't there when it took place, but it was in that room. And so people can say, okay, that's one of the real key things that we're looking at. I'm going to put an alert on my machine. So if JP Morgan breaks below 140, I'll see it if Matt doesn't highlight it. And again, I wish I could be on there, 100% of the time, but I just can't. And neither, and most people, you have those alerts, which is great. But I want to put more than just picks. But I don't clutter it. That's the whole idea. I don't clutter it. Only really, really important messages. The vast majority of stuff there are the picks, but once in a while I'll put some other stuff in there just so people can vie on some of look at some of the things that I think are important going forward, but maybe not immediately actionable, but maybe actionable later that day or later that week.
Yeah, and I just wanted to show them the chat room really quick, but go ahead and take over the screen there, Matt. I just wanted to show them really quick.
Sure.
The entries and exits, all that stuff. Yeah, it's legit, guys. Try it. 7-day money back guarantee. You literally have nothing to lose.
Yeah, I don't know. Do we want to start doing some tickers and go over some things that people are looking for? I mean, obviously, I think there's probably a lot of things that people are looking at right now. The Alibabas of the world, or obviously Tesla's always a big one, Bitcoin, et cetera. I'll be more than happy to kind of answer your questions for specific stocks or ETFs or markets, for that matter. If you're, I don't trade the nickel market, but it's been pretty wild lately. I do follow nickel, of course, but and the same thing like lumber. I follow lumber very, very closely. I've never traded it, but I follow it closely because that's a very important thing to follow for the Home Depots and the home builders of the world, which can be quite volatile and very great opportunity there.
So let's do a fun exercise then. Let's get tickers from the chat, and if Matt Maley thinks that this is a trade that would be worth taking a trade on possibly next week, right? Obviously, follow up in the chat room with the specifics. We can't get too deep into all of them right now, of course. But yeah, if you see anyone that you like, as you always do, you follow up in the chat room if there's a trade to be made there or if there's not a trade to be made there, right? So keep that in mind because there's a lot of chat room members here. They just want to get a heads up on it. So yes, don't worry, Matt's going to follow up with the stuff in the chat if he trades it.
Yeah. I'm just going to go back. While you guys are putting some things in there, I'm going to go back to this one on CRM on Salesforce. Oops. There we go. Salesforce.com. I'm going to look at the chart again. Remember what I talked about this, and I'm going to put up the shorter term chart. This is the weekly chart. And then I'm going to go back to Bloomberg and on the live Bloomberg, and we'll look at the shorter term chart. But again, remember this thing, 200 week, 200 week, 200 week. It bounces every single time. It's bouncing off it nicely. Again, bouncing off oversold so many different times. It's not quite there yet, so we're really looking for that. But it probably won't happen right away. But this is one I really want to be looking at, and this is one not just on your. You will. I used to know how to talk. Sorry. This is one you want to look at on some short-term trades. We'll be looking at options, but also on your long-term portfolio that we want to buy some stock and just tuck it away for a while, because I do think this has been a. Let's see here. Hold on. Okay, now let's go back again. I just wanted to remind people from that chart from earlier, and now let's pull up the.
Really quick, Matt. Really quick before we do that, I do have to give a shout out here to WFN project manager, you Benny, and Eugene. Shout out. Welcome to the family, guys. Great to have you guys. Amazing stuff.
Great. Welcome aboard. I'm looking forward to working with you guys, guys and men and women, guys and gals. My dad used to always, my 92-year-old father calls them guys and gals. But here so look at the CRM here. Now I'm going to add one thing here. Remember I talked about the MACD chart. I'm sorry, the MACD chart. I'm going to add that here. Now, boom. Okay. See how it was it just couldn't give us a definitive. It had a nice little positive cross there, but couldn't really hold it. It was kind of bouncing around. We're looking like we're getting a more. This is the daily chart. What I showed you earlier was the weekly chart. It's starting to push towards overbought, but not really that close. So I'm not that worried about it. But it is breaking above its 50-day moving average. I'm going to take away the 200-day right now because it's really not that close to it. And it's not going to be, it could be a compelling issue later, but not, I don't think anytime in the next week or so. But look at this stock. See how it kind of played around, but look at the 50-day. It was riding the 50-day moving average. It was key support. It looked like it was a hold it again. Remember, it got a little below it, and then, oh my gosh, a big bounce, and then it failed. And then boom, shamalama ding dong, the stock just got crushed over the next 2 months, last 3 months. Okay. So that one of the easiest rules in technical analysis, old support becomes new resistance, and just the opposite. Old resistance can become new support. So the fact that we've broken above this, we're going to see. I wouldn't be surprised again if it pulls back a little bit on Monday after this huge run it saw, and especially on Friday with that huge run. It may have to take a breather and digest those gains a little bit. But if it can hold this 250-day and break above Friday's high, it closed right at its highs. That's going to give us the confirmation we want to buy some calls in that one. And this may not happen till Tuesday or even Wednesday if we get a kind of a sideways breather to start the week. And but this is one that I want to be looking at very, very closely next week because it is down so much. And again, it's not only is it, see this here, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. Ooh, well, not really a higher high, a little bit higher than that, but okay. But a higher low, that changes. This is the first higher low we've had. Now we got a slight higher high, right? It's only a slight one and above the 50-day moving average. On the technical side of things, remember what I talked about, the weekly chart looks fabulous. So we want to be buying this stock on tomorrow. And then we want to be looking at the options, maybe even nibble on them a little bit. And if we get a MACD cross on the weekly chart later this week, we'll add even more to it. And when we'll really add to the options. And then see, here's the weekly chart. It's just starting to pull up. And by midweek next week, we could indeed have that kind of this is the 50-week moving average now, so don't be distracted by that. But again, it's RSI chart. Again, I don't want to repeat all that, but the point is, this is one we really want to look at next week. And if there's no guarantee. There could be something where it just kind of all of a sudden just sits there for a week, and then we'll just sit there and wait. Well, wait, okay, which way is it going to break? But this is one I will almost certainly want to make a play on. Now, if it rolls over, we might even play it on the negative side. But this is one that we're definitely leaning towards on the buy side. So, Matt's important messages. I'm going to be putting that one on in first thing Monday morning. And when will we act on it? No guarantee we'll act on it immediately, but I will definitely put it in there so that it's on everybody's radar screen for next week. Again, it's not the cheapest company in the world. That's one thing that makes me a little concerned, because it's still trading 46 times earnings, which is a lot better than 70 times that it was a few months ago, but it's still not cheap. But Tesla, just because I know everybody likes to talk about Tesla, here the 50-day moving averages, you can kind of tell it's not. Let me get rid of the green line is the 100-day. I'm going to get rid of that. You can see these moving averages had been important last year. I mean, last year, the 200-day moving average last summer was incredibly important. See how it rolled right along that? So when it came down to here, I was like, oh, this is going to be a really important note. Well, it's become less important on a very short-term basis. And so, but what I'm really looking for, again, you got lower high, lower low. This was not a lower high, but it wasn't a higher high either. It was equal. Then a lower low. That wasn't even a low. I mean, again, lower, lower low. Another lower high, not a lower low. So we got a higher low and a slight higher high. Same type of thing. This one has some potential to be, let's just look at this MACD chart. But this one, especially breaking above 900, I would love to see it kind of do nothing on Monday and Tuesday, that it kind of, again, digest these gains of the last couple of days. And then, because if that happens, then it breaks above that 905 level. Oh my gosh, we're going to be buying those call options hand over fist. And again, then the stock may go down to 700, retest the center out level before the year is over. My thing's freezing up. I'm sorry, but before the year is over, it might see a shoot. Well, anyway, but we can see what I'm talking about here, right? So again, first first higher low in a long time, first followed by a mild higher high, and see, that's 20% move. That doesn't look like much. We're going to go another 20% higher if this thing can kind of settle in and then break up again. So this is one. And I meant to put this here, bang. And of course, on a short-term basis, it's 2 month. It broke above. See how it broke above. It's 200-day. I'm sorry. It's 2 month trend channel. Trend line. I'm sorry. I don't want to get. I'm going to excuse me a second, because I just want to take some of these numbers off here so it doesn't look quite so busy. The chart doesn't look quite so busy, and I'll zoom this in so you can see it a little bit better. Okay.
Hey, just want to give a quick shout out here to Bobby. Welcome, Bobby.
Thank you, Bobby. Great to be here. Great, glad to have you here. Now look at this here. See how this we traded down. Well, we had this trend line going all the way down. In March, it actually traded above it, but it didn't really break away, right? It actually traded down again, but it never broke back below that trend line. That's bullish. It's a bullish divergence. Not enough to get excited about, but now it is, because we're getting a higher low, higher high sequence. So this is another reason to think that Tesla I'm going to make sure I'm talking. I write these down to make sure that I don't forget to talk about them in the chat room next week. But we talk about Tesla all the time, anyways. But see how that works. See how that technical analysis works. And the other thing, this one thing. Gosh, I usually talk about this every time, and I won't go too much into it, because the people who've been here before will get bored with hearing this. But technical analysis is fundamentally based. Okay, number one. On a longer term basis, it's definitely fundamentally based, because it takes time. I mean, whenever you talk to anybody who says we've got to look at the fundamentals, that's great. But you work at a big mutual fund, you've got an army of analysts to tell you what's going on in a company. And if a company hasn't been doing poorly for a long period of time, and suddenly things start to get better, well, when the things were going poorly, they had to lay off people, close factories, whatever. And when they finally turn things around, well, they've got to rehire those people. That takes time. They have to retrain those people. That takes time. They have to retool their factories. That takes time. But the analysts, they see the things turning around and they turn to their portfolio managers and say, don't wait for the earnings to turn up because they're not going to turn up for another 6 to 9 months. Buy the stock now. Don't wait for that. Okay. But individual investors don't have an army of analysts to tell them that. So we look at the technical analysis and see that those smart money guys are buying it. And you say, hey, it's breaking some resistance levels. Something's going on here. And see, you can see it actually is fundamentally based. Same thing happens to the downside because things start to turn down before the layoffs come because people don't like to, I mean, they're human beings. They don't like to lay off people. Let's the analysts realize, hey, the earnings, the business isn't doing well, but they haven't laid anybody off yet. Because they're human beings and they want to see maybe things will turn back up. Well, they say, hey, you better start selling the stock. Things aren't going well. So by the time they actually lay off people, the stock's already down. Again, we're trying to see those things. The other thing, though, also, although it tells us where people are buying and selling the stock, for whatever reason. I mean, and the pure technician, he doesn't care the reason. He just looking solely at price. This is where they keep coming and buy it. Well, in this situation, they kept buying it at that trend line. Okay, instead of selling it like they were all the way down here, they actually buying the dip, and then of course it bit. So I don't want to get too much into it, but Tesla, it was funny because I didn't even notice this part of when I was looking at it on Friday, I didn't even notice this part of the trend line. So this stock, we might even buy it. I just think it would be better if it'll have more of a chance to run straight to 1,000 if it takes a breather for a day or two. And again, the market, I'm very cautious on the market. We're going to see what happens when the market opens because this thing could root. So I'm not going to be buying this call option first thing. Number one, I think it would be better if it held off for a couple of days. Number one. Number two, we got to make sure that we don't get something out of Russia. We got to look at the bond market, see what's going on with interest rates, yield curve, et cetera. The whole market could roll back over very, very quickly. But if the market if this last week's rally is the beginning of a multi-week rally, Tesla and Salesforce.com are going to be two names amongst many that are going to do very, very well. But the thing is, even though I think it's a sucker's rally, even if it lasts a couple of weeks, what are they going to rush in to buy? Okay, are they going to rush in to buy Apple? Well, maybe. But that stock didn't come down anywhere near as much as Tesla did. Everybody loves Tesla. Everybody loves Tesla to trade it. Okay, even if they think nobody thinks they're going out of business anymore. But but look at this thing going straight to the moon. Now, another one before we go with the names that you guys DraftKings here. Now, DKNG. I think I mixed with there we go. Yeah. Now, this is a favorite, but gotta be careful. Gotta be careful on this one. It's interesting. Jim Chanos, one of the most successful short sellers in the history of the business, it came out on Friday saying he has a new short position in DraftKings and he's going to hold on to it for a long time. Take that back. That was not what's DraftKings? Anyway, I don't know if it was an old one or not, but anyway, he was really. No, it was not his new short. That was not his new short. It's one that he's been short for a while. Take it back. Short for a while, but he still thinks it's going a lot lower. Now, what I'm looking at right now, again, lower lows, lower highs. Since he's a lot smarter than I am, I'm going to bet we get another lower high, just like we've gotten all the way along here. This one's actually a double top. So when it gets back to its 50-day moving average, if it does, which is at $21.25 to be, $21.27 to be exact, I might be looking to buy some put options there. And I won't go on to the details. You can look it up. It was an interview on CNBC. Just look up Jim Chanos on CNBC. You can see I'm sure they have the article on their website or the video on their website. And he's just not a believer in this stock. So be very, very careful. I know it's one that people want to buy because they see how much betting goings on, especially now with the NCAA basketball tournament. The Masters is coming up. So there's going to be a lot of betting going on, basketball playoffs, hockey playoffs. And his reasoning was very interesting. I don't want to take 20 minutes on that. But it was very interesting. And the concept it's a great concept, but it's hard for them to make money in it. And so just be aware of that one. I just want to make sure people knew that, because I know there's a lot of people keep asking me, what do you think of DraftKings? Is it time to buy? Well, and all I know is that one of the smartest short sellers in the history of the Wall Street is staying with his short position. The stock that he did say was his new short is Coin, which is kind of interesting. And he's got, this was a brand new short for him. And look at this thing here. Be careful. This stock is going to open down because he announced this after the close on Friday. So not that he's right. Here's a guy who said that Tesla was going to zero. Okay. He was dead wrong on that. And he lost a lot of money on that, being short Tesla. I don't know if he has a position anymore. They didn't really talk about that, but at least I didn't hear him. And, but again, this is one you got to be careful. This breaks below 150. You see how I would give it a key lower low, because that's one you want to be careful. I've liked it fundamentally. Then listening to his story was his bearish bet on Coinbase has nothing to do with his opinion on Bitcoin. He was not saying he said, I'm not necessarily, he didn't really talk about Bitcoin. He kind of danced around it, but he said she's not short Bitcoin. At least, I believe he flat out said he was not short Bitcoin. But he definitely said that this has more to do with the specific company, not to do with his thought on Bitcoin. Now, what are we looking at Bitcoin right here? Let's look at this chart. And again, I'm sorry. I said I was going to ask you for your tips. I got my haircut. Jesus. And I will go to that. But I know these ones are ones that are popular among a lot of people. What we're looking at now. Let's get the moving averages. Don't mean as much on this one right now. Here we are. We're kind of in neutral territory. What you could look at and say, and I'm seeing this now. I like Bitcoin long term. One of my favorite reasons is just simply because all these people in Washington, D.C. who keep buying stuff on inside information, making millions on inside information, are buying Bitcoin. And if they're doing it, there must be something right. But I mean, that's not the only reason. I just think that there's a lot of things. But Ethereum is my better call. But here we're seeing it's not a classic one, but it's they're kind of forming a symmetrical triangle pattern there. And the key though is like, we do need to know, I'm going to go back further in time. 30,000 is the line in the sand. 30,000 is a major league line in the sand. 2016. You can see here how 30 for many months last year, it broke below that. I'm sorry, it held that 30,000. So if it breaks below it for some reason or other, it's going to fall hard. Whether that yeah, again, and I'm not saying that, oh my gosh, it's going to zero, but I think if it drops below 30,000, it's probably going to drop all the way to 20,000. Now, again, it has to be, if it goes, here, see how it went a little below 30,000? If you can see that, so if it goes to $29,070, that's not it, but it gets down below 29,000, you got to be very, very careful. But I wanted to draw a line here. Let's see if we can get. Yeah, that wasn't really, that's a lousy, but that's not the one I wanted. Hold on one more second. Let's go from here. Look at this. See how we kind of, same thing here, where I'll shrink it, I'll zoom it up for you. No. See how Bitcoin, from this trend line, the red line there, let me get this off of here. Why is this not disappearing? Okay, well, there, good, I got rid of it. But see how there we go, finally. See how the trend line there, it broke below it, went right back up to it, couldn't break above it. Okay, that's a higher low, so that's good, but couldn't make a higher high, still couldn't break. It can't break above that trend line. So what we really want to see this thing, again, it's kind of a highs in here. To really turn bullish on kind of neutral, I guess is my point, near term, we got to get it above about basically 46,000, 47,000 to be bullish. And it keeps trying, but until it does that, it doesn't look like it's going to see a big move, another big move higher. I think we will get one eventually, but that's kind of my thinking on big. And again, you break below 30,000, which is not out of the question, because it's still a liquidity trade to a certain degree, and it's a risk on, risk off. If we get a bigger sell-off in the broad stock market, like I think we'll get, this could break below 30,000. It will. The great thing about it is it will provide an unbelievably great buying opportunity. But you get down to 29,000, 28,500, especially if the RSI is not particularly oversold, or other overbought, oversold measures, you want to avoid it. And then you'll be looking to see the thing get washed out down near 20,000. I'm not calling for that. I think the chances are pretty good. It might even hold 30,000, but be careful. And on a near-term basis, you really want to get above those highs from February, and basically the February highs, 46,000 range, to get back above that trend line going back to 2020. But anyway, other names, I'd be more than happy to take ones that.
Okay. All right. And I just want to mention, guys, that Matt Maley also covers crypto in the chat room. It's not only options. You can also ask for stocks, long terms, that sort of stuff, swings. And you can also, just like this, right? So it's very flexible. It's not a lot of people like to trade options there. But you can ask for other things. It's as close as you can get to a private trading partner there, I'd say. But all right, Matt, so let's say we do have a market collapse, right? A big dip. What would be the first thing that you're thinking about buying? Like your reflex? Is it Tesla or Bitcoin, or what would it be?
Pull it up here.
Facebook. I knew you were going to say Facebook. Facebook? Yeah.
Yeah. And the reason is because it's beaten down. And it's good, so it's going to do a lot better on the way back up. I mean, it's way down more than most other stocks, and for good reason. But I also think part of the reason is that part of that good reason is that they did it. It was self-inflicted. They did it purposely, and they said, okay, well, first of all, you see, it had a death cross, right? Who cares? The death cross happened last year, so that death crosses are something you worry about. Say, oh my gosh, we have a confirmed death cross, so the next several months will be tough. Well, it sure has been tough for Facebook, or Meta, whatever you want to call it. But look at how oversold this stock got. And again, we went in and bought this for a short-term trade and made some money. They came back down and actually made a lower low. But I do think, especially if we get a big washout move later in the year, remember, usually frequently you get September and October when the big washout takes place. If that happens, it'll be closer to the election. And I honestly think they did this purposely. They didn't do anything. They did it was smart. It's like, hey, let's get our bad laundry out there now, so the stock's down. And when we come around next summer and people up for re-election and they're looking for a reason to put themselves on TV, they'll attack. If our stock is at $400 and what's his name is the CEO is worth, Zuckerberg is worth even more money. That makes them an easier target. And if they've lost money and haven't been doing well, this was smart for them, because when you get close, nobody's going to call for hearings on Facebook in October. They're going to be all out campaigning, but they will do it over the summer. And the fact that they're flat on the back makes them a lesser of a target. And especially right now with what's going on in Russia and inflation and stuff. But if this market gets hit hard later on, again, let's look at the we're looking at the daily chart. Let's look at the weekly chart. There we go. See how oversold this weekly chart is? Look at this thing. Okay, yeah, it's come back because it has bounced back, but it's still wildly oversold. Okay, now I honestly think that Zuckerberg he doesn't want it to bounce back too much, at least not yet. He's playing the long, which is smart. He's playing the long-term game, just like Bezos did for years in Amazon. I mean, Amazon's one of the greatest companies ever. They've changed the world over the last 25 years, but they've had 24, just in the last decade, they've had 24 corrections of 20 to 60%. He's like, hey, I'm investing in the business. Zuckerberg's actually doing that as well. He's playing it smart so that they put out the bad laundry now, baby with the bathwater, so they'll get fewer restrictions put on them if and when any do come down the road. And then this thing is going to go better. So again, when you got a stock that's down this much, let's do it here, FBX. And does anybody say, I mean, when you hear people say, "Oh, I'm staying away from it now," but nobody says, "Hey, this is a lousy company, and that it's poorly run, and that we need to get away from this thing." They're just saying, "I'm going to stay away from it for a while," for the reasons that we've all heard about. But okay, this is Facebook. I'm going to compare it to Apple, which again, Apple's a great company, and you do want to buy it if the market gets crushed. But which one do you think is going to rally more? Whoops. Ah, shoot. Okay, sorry about that. Gosh darn it. Let me do it again real quick. Okay. Hopefully you can see it. Okay. Which one do you think? Look at it. These stocks trade pretty much in tandem with one another until they finally get that bad news. Okay. Which stock is going to have more upside potential when it gets washed out? I mean, they're both going to be great buys, but Facebook is going to have a lot more upside potential. As again, it goes back to the, to the Warren Buffett thing. Which one does he buy? Did he buy? Well, he's bought some really good companies like Goldman Sachs. They were a lot more flat on their back than people realized at the time, way back in 2009. But the point is, he goes in with good companies that are further on their flat on their back, who need the investment and that are much cheaper. And Facebook's going to be much cheaper than Apple whenever we get that washout low, which I do think we're going to get. Again, nothing wrong with buying Apple, especially in your long-term thing. But for the shorter-term chart, take advantage of this somewhat mini crisis that Facebook's going through, because they're playing the game. They're playing the game very, very smart. Whether you like them or not, I understand why you might not. But there's a lot of reasons why I don't like them. But when I'm looking at the stocks, this is one that that I will be playing on the long side of things if and when we get a big washout in the market. Some other names. I know we're going to try to wrap up pretty soon. We've been doing this for a while. I'm sure people are getting tired.
Let's get some tickers from the chat. All right, let's see what we have here. Benny, just wait until we're done with the session. Robin with Oxy, OXY.
Well, interesting. This one is this is a company that really leveraged to the price of oil. I didn't like the leverage the way the CEO put into it, but she's done really well, and she's convinced Warren Buffett, who is not somebody that loves leverage, and he loves the stock. Now, you can see here how that 200-day moving average. See that if this stock, and I don't think it's going to come retest it, but if it does for some reason, look how great support that's been. Again, it might dip a little bit below, but that's okay. But see how it got so overbought there? There in its RSI chart. It's getting ahead of itself. We should see what oil does tomorrow. They're trying to stock. China's now saying that they'd really like to see this, like to do what they can to make the situation in Ukraine, calm down. But see how oil has come down. Let's see, oil might be vulnerable again here. So I love Oxy. I like Oxy on a longer term basis. I like Conoco and Chevron better. I think the better run companies. Devon Energy is another one. Apache, APA. You want to look at this one. It's such a great. A great management team. This is it's just rock solid site. Did not get as overbought. If again, you probably see a bid, but you get back down to 35. It may not get all the way down there, but this is the one I think you really want to be looking at. I don't get me wrong, I do like Oxy, but you just see how again when you get Warren Buffett give you the seal of approval, that gives you a lot of credibility longer term, but it also causes the stock to get overbought short term because every retail investor in the world came in and said, "Oh, Warren Buffett loves it. I'm going to buy it." But see how incredibly overbought. Let's look at its weekly. Probably got quite overbought too. See, its weekly chart got way overbought. So this is one I'm going to be a buyer on weakness, especially if it gets back down towards 50. It's okay to chase it here, but be nibble. Don't be aggressive. Nibble on it here. And I'm not buying the call options yet. I wouldn't buy the put options either, but I'm not buying the call options yet. I think when it gets back down a little bit towards 50, we take another look at it.
Interesting take there. All right, then we have I think okay, we already did Apple, we already did CRM. Let's look at all right, then we have Neo from Glenford.
Which stock? I'm sorry.
Neo,
Neo, NIO?
EV, yeah.
Yeah, okay. Okay, this it's well on the chart, it looks pretty good here. I just hold on a second. Let's see what do they report? When do they dividend? Okay, they still don't report. Oh no, yeah, they report on the 24th. So that's interesting. So that's coming up this week. That's going to be very interesting. I'm glad I looked at that. So let's. The one thing I worry about this whole thing is the nickel and well, we have a problem if this thing doesn't get fixed and nickel becomes a problem. I mean, these guys who make these, even Tesla are going to have some issues because without that, those rare earth metals, they had a big problem. And so I think this points the reason a lot of these EV companies have been getting smacked around lately. Tesla not as much, but a lot of them have been. This is a nice a play here where it's finally bouncing up, but again, lower highs, lower lows, all the way down. It is coming up a nice oversold level. Let's look at the. I'm going to look at the. When it gets through these moving averages, they don't really mean much to me here. Those off of there. I'm going to add the. MACD. I'm sure the MACD chart is probably got a nice positive cross last week. So that should be bullish. So it's not quite there yet. So if it can get us a little bit more positive MACD, see how it got a bunch of head fakes there. It could be the same thing here. And even this one wasn't, it did get a little bit of a rally. You can see these MACD crosses are all short term. I must admit I'm nervous on this stock. Just because I think these EV guys are having more problems than people realize, and this whole thing with being able to get the rare earth metals they need could be a problem if this situation continues to prolong and be prolonged in Eastern Europe because it has it has all sorts of repercussions to China, et cetera. On a short-term play, anything can happen with the earnings, and I have no idea what's going to happen when they report earnings, but it's trying to test the top, and it's trying to break out of the top end of that trend channel it's been in since November. So if it can finally do that, it might be a short-term play, but I'm not as bullish as some people are on the stock on a longer-term basis.
Okay, all right. So we've been here total of like about 4 hours, Matt. So shout out to you. Shout out to everybody here who's made it to the end. You definitely have a much better understanding here of what's happening, right? And also how we're trading around it. All the trade ideas, the setups, Matt strategies, what we're doing in the chat room every single day, Monday to Friday. Trading the volatility. Richard Judge says, love you, Matt. Matt has changed lives. Gotta give credit where credit is due. So we've been here for a while, Matt, and I know you're a busy guy. So any closing remarks on your end on the markets, what you're going to be looking forward to in the chat room with the members, and why the folks here should join us here for the St. Patrick's special we got?
Yeah, I just say, as I've been saying, I just believe that we're in this situation where the market is, the volatility is going to stay with us for a while. This is much more than just the Ukraine, Russia situation. We have a Fed that is completely changed their policy, and that's going to create some headwinds and going to create, I think, a lot of volatility through the rest of the year. Now, when we're finished up here, hold on, because I know Rodrigo's got some some closing comments, and I think we're really kind of able to wrap up what we're trying to do here in this chat room, and have been doing for many months. So I hope you'll stay with that. It'll only take a couple of minutes at the most, and just but just know that again, going back to what I said earlier, we want to embrace this volatility. Don't be afraid of it. We want to profit from it. So if and when we get, kind of a washout low, which I think we will get at some point this year, we will not only have the money to take advantage of it, we'll have the confidence to take advantage of it. And we won't be back on our feet having lost a lot of money saying, oh my God, I don't want to take the chance. This is what, again, that's where the people make their money. When the baby gets thrown out with the bathwater, when the margin calls come, we want to have that. And we have the tools to do it. As individual traders, which the individual investor did not have really until recently. So good luck with everything. But this coming week, we're going to be looking closely at the markets and see how they react to any new news from over the weekend. And because I think, however the market finishes, acts through the full week, not just the first 2 days, first full week will be important how it trades over the next few weeks. And either way, I think we'll be looking for another pullback at some point, whether it starts next week or in a couple of weeks. Either way, we want to take advantage of it. We'll stay nimble. And again, because we made some real nice money on the market on the way down, but we've also been able to make it on the way up. And since we have the tools to do it, let's continue to play it this way, take advantage of it, and embrace it. That's all I've got. Happy St. Patrick's Day. As my 92-year-old father said, and I'm saying this all as a joke, but he has said it my whole life, there are two types of people in this world, those who are Irish and those who wish they were. So other than that, when you're 92, you get to say those things. Anyway, thanks a lot. Have a great one. And hopefully we'll see you out on the chat tomorrow, starting tomorrow, next week. Have a great one, Rodrigo. Thanks a lot.
All right, Mr. Matt, thank you so much, man, for being here. I'll see you in the chat room tomorrow as usual, man. Thanks for the picks. And guys, that was Matt Maley. Great job here. Thanks a lot, Matt.
Thanks, buddy. We'll talk to you soon.
Great job, man. All right, man. Sounds good. Guys, really quick, I'm showing you the chat room, and I'm going to show you a couple other things here from Matt. So please make sure to stay and just watch this, at least for those that, especially those that joined. Bobby, Eugene, you Benny, make sure, and guys, just so you know, even though the checkout says 78% off, but it's actually 90% off. Really, it's your lucky day, because there was the marketing people made a mistake, and now you get the deal that, the $697 for the year. So I really think that you guys should take advantage of it. And yeah, pretty much take advantage of it, right? He's on vacation, so he's not coming back till like a week. So hey, no, I'm just kidding. It's going to be fixed though by midnight. So I would suggest take advantage of this, because it's probably going to go back to what it should be, $997. But if you get it for $697 right now, you keep it. Okay, I'm trying to hook you guys up. I don't know how else to say this. Get the damn deal. You understand? Get the damn deal, or you're going to pay more afterwards. Look, 14,000%. I don't mind paying, I'll pay a lot for that. I'll tell you that. But if you can get it for $697, come on, man. Let's be real here. Okay. A lot of you people wanted to ask about, where did Matt post the entry for that FXI trade, for the one that was for the one, how do you say it? For the one that was like 14,000% on the calls. Alfredo in the chat, check the link out there. You can join there. A lot of you guys were asking me, where did Matt post that FXI trade that's up 14,000%? Well, that's what I'm showing you right now. This is the chat room, right? You can open it into a bigger window, right? Into the main chat. If you click here, open chat in new window. But I just have it here on the normal chat, right? And you see there's two chat rooms there. One that says Inner Circle Chat. That's where everybody is. Matt, all the folks, the gang. We're talking about trade ideas, setups. Matt does his best really in there to talk with you guys. Transbuilder, just send me a quick email and we could talk, and we'll see what we can do there. All right, and so Inner Circle Chat is where everybody is commenting, right, including Matt. And if you notice, there's a bell next to it. If you have it like this on yellow, that means that you're going to have a pop notification whenever somebody's posting. So when somebody else will post there, basically you're going to see, you're going to hear that sound, right? So the other chat room is this one where it's called Matt's Important Messages, because not only does he give you trade ideas, but he gives you updates on the market as far as like actionable trade setups, trade ideas. Alfredo, you're welcome, dude. No worries, man. St. Patty special. Go wild, folks. Go wild. Trust me on this. You want to get the deal. You want to get this deal. I'll tell you that. I've been trading Matt's picks for over a year. All right. I'll tell you, I'm very in the green with Matt, and give it a shot. Trust me on that one. So let's go back here to the all right, to the chat room. Okay. So the other chat room, it's called Matt's Important Messages, posting entries, exits, updates, why he's doing it, what's happening in the markets. Many times you'll get head fakes in the markets, and you're pretty much going to, you're going to get fooled by the market. That's why really having Matt there all day is super important, because that way you're able to have that direct interaction, that direct feedback, right? Hey, I don't think this rally is going to hold. I'm going to start buying puts. And he's been doing that for like 3-4 months. We've literally been shorting the market for like 4 months. And the Matt Maley chat members are literally the chat members that make the most money in the entire chat room space of Benzinga. I'm telling you, Matt Maley, that is where the money's being made. I'm showing you the trades. Like, we're showing you the trade ideas, the entries. We're doing this back to back almost every weekend. So this is happening. I'm not going to say every single day, but it happens very consistently, several days of the week, right? Many of them. So as you can see, I showed you the entry. Let's just show you the entry here, right? FXI, the trade that went up 14,000%. So Transbuilder is saying that he's made $3,000 from $400, and he's a mechanic. And at lunch breaks, and I was looking at the scans. Well, good stuff, man. Shout out. Okay, guys. So you see the entry for the FXI calls before the close. Okay, that's the entry. That's literally he's buying the calls there. Okay, and that's not the entry. There was a prior entry right there. 9:53 a.m. If you don't believe me, go ahead and pull up the chart last Monday. Okay, FXI last Monday. He says, I'm going to take a flyer and buy some FXI March 18 calls. Literally, this was 2 days ago. So, well, the expiration. So these stocks went up huge time, right? So that's the entry. And he bought more at the close right here. He bought more at the close. He doubled down. Yeah, Transbuilder, you're right. It's not a get rich quick thing, but like when you're trading options, weekly calls and weekly puts, that's really those are the numbers that you see. That's just how the options work, right? And that's the kind of contracts that we're buying. You literally get an exact look. I mean, buying QQQ March 16 $310 puts, you know exactly what to buy. You know exactly what to buy. There's no confusion. There's no grayness here, guys. I'm telling you, it's the most simple type of trade you can make. Buying a call and buying a put. It's as simple as it can get. If you want to make like that kind of percentages, you will never do that by doing spreads. You will never do that by doing butterflies. You will never do that by doing all these complex trades with options. And you will never do that, certainly buying and holding in this market. Anybody that's bought in the past 3-4 months and has been holding is down. And look at how we are doing in the chat room. 14,000% gainers, other 100% gainers on the Qs. We're trading the volatility and we're okay with it. Matt is really good at this stuff. So I'm going to post the chat here. I'm going to post the link. Harlan, so I'm just going to sum it all up for you guys. If you want to trade and you want to get fancy, right, and you want to buy and hold and do dividends and all this stuff, do that. If you want to do that, okay? But know that your returns are going to be not as high as maybe you would think or want to be honest, right? So you have to be okay with that. Now, if you're on the other side of the coin and you really like to make, you would like to make, right? I mean, who wouldn't, right? You would like to make hundreds of percents on your trades when they work out. And, in some cases, like the FXI trade, which I'm showing you the clear entry and the clear exit, right? Those calls went up 7,000% and the other calls went up 14,000%. So these are real trades that we are making. We are booking them. We are putting entries. We are posting exits. There are timestamps here so that you know exactly when Matt got in and when he got out. If it literally would take you, all it takes is to have a damn window open to make a 14,000% gain or trade. If that's all it takes, I don't know why you're not doing it. I don't know what else is going to give you those sort of results. And the least thing that you could do is have a window open, because I know a lot of people that work full time that banked on this trade and made insane money. So even people that have 9-to-5 jobs are able to make money out of this. It doesn't mean that you have to be glued to the screen all day. You just need to have a chat room open, just like you check your Instagram feed all day when you get a notification, right? Just when you check your Twitter feed, all that, stuff, all that social media stuff, that doesn't matter, right? But then when it comes to making money, you need to, why not prioritize this? This is serious money that you could be making. And all you have to do is have a window tab open at wherever you are on your job or wherever, and you have sound notifications too, guys. So I'm telling you, if that's all it takes to make that kind of money on trades with Matt, then I don't know what your excuse would be at this point, because clear entries, clear exits, no confusion, no gray area. There's no grayness. There's no hypotheticals. There's no what ifs. And it doesn't matter if the market is going up or down. It doesn't matter what the direction is going. You're still going to be able to profit with Matt. That's just how he trades. So Harlan, I would say there's a huge difference in the way that they trade between those people that you mentioned. But I would say when it comes to the trades that have the biggest gains and look, the record at Benzinga is Matt's trades, bro. It's Matt's trades. There's no, that's what it is. It is what it is, man. So Matt just pulls out the really insane trades. Ever since I've been following his trades and things like that, it's always been like that, like that Viacom trade. And after that Viacom trade, I was like shocked, that he was calling that, right? Entries and exits on that trade. But then, you got to understand those kind of opportunities don't come every day or every month, right? But as a community, as we get bigger, as we get smarter, more educated together as a group, as a community, we start looking at other stocks. So imagine if you have 50 or 100 people, trying to find these stocks for Matt, right? And Matt just reviews them, right? Then maybe we could have more of these home runs, right? But we got to give Matt the charts. We got to give him some tickers. We got to help him out, and he'll get it. Like, that's what I'd say, because it just becomes better as we have more eyeballs in the chat, because everybody's looking at different things. And just like that Snapchat trade, which was a 500% gainer, right? A 500%, and that came from the chat. So I really have to highlight and emphasize the power and the greatness of the community that we have in our Stock Picks Inner Circle chat room, where everybody's helping each other. Everybody's talking about trade ideas. I mean, I want to show you like the messages from last week, where everybody was posting their gains. I'm going to show you this in here so that you can see it for yourself here. Let me go back up here. Yeah, so Mary, I mean, when it so Mary, you have a similar question to Harlan. So my question is, I'm going to answer your question with another question. What do you care about the most? Do you care about doing complicated option trades? Do you care about, buying and holding? Or do you really just care about making money? It doesn't matter what you have to do in the market, right? So if the answer is that what you care about is making money actively every single day, because it's live trading, that's what's happening in the chat room. We're live trading every single day. And you're going to see the comments and everything. You'll see that people, they're doing pretty well here. So if you want to live trade, if you want to make money and you want to make, like, if you want the chat room that makes, like, how do I put this? It's just that, we're trading weekly calls and weekly puts. So obviously we're going to have 1, 2, 3, 400% gainers. And in this case, 14,000% gainers. You're not going to see that everywhere. That's very uncommon. I'm going to be 100% honest with you. That's super rare. It's super rare to somebody have a trade that's like 14,000%. It's super rare. I've gotten lucky with, like, 1,000% back, winners, but 14,000 is a different animal. It's just another. I mean, it just gives me like a headache to think how much would these people have made. Whatever, you put a couple $100 on that trade, or $500. So yeah, this is where pretty much everybody's chatting here. Let me find some of the trades here last Friday. Yes, H Polit. So basically, Matt is doing live trading all day, which is 100% focused on trading actively, buying calls, buying puts, making money on a daily basis, right? We're either adding to a position, trimming a position. The market can change, and Matt will let you know, hey, I've changed my mind on this. Let's start selling those puts and buy some calls. And, like, he will let you know everything, because keep in mind, you guys are his community. You guys are like a group. You're like his students. Like, and he's your mentor. He's your leader, your educator. He's got so much experience on the belt that, like, you not participating, you're doing a disservice to yourself if you don't take advantage of the person you have in front of you. I'm just being honest. He's been doing this for 40 years. You just can't buy that kind of experience. So being in a chat room with him where you see everybody's talking about different trade ideas and things like that, and you get his entries, you get his exits, that's golden. I mean, I don't know what more you could want, right? Exits and entries and updates. That's really all I really want, right? The entries and the exits. And the session on Tuesday is really good, because on Tuesday, pretty much you have the entire, you have the session, right? So 11:30 a.m. Eastern. That's when you have the session just for the chat members with Matt. Okay. So Rick is saying, do you have a good example of a chat that gave a good setup? No, not right now. I know that he's posted stuff there, but the most recent one was the FXI one. And before that, we've had the QQQ trades and we're actively trading that. So we're actively taking profits, actively closing positions and adding other ones, depending on the market volatility, right? Because we trade the volatility. Okay, I just want to focus on that, guys. We trade the volatility. We don't buy and hold and wait, for this whole thing to be over, or we don't wait for, the market to be at all-time highs to buy in. We're not doing that. We're trading the volatility. It does not matter if the market goes up or down, if the news is good or bad. It does not matter. We still trade it and we make money with it. And with the way that we do it, with the short-term near expiration calls and puts, it does give us that extra leverage per se, because these puts are already, there's not a lot of premium built into them. It's just because that's why we're buying them such in short term. So, yeah, I'm trying to pull back here. It looks like these people having a great conversations there about coin, Jim Chano, CNBC. Okay. Let's see. So people, so people are always talking about, okay, all right, everybody, please pay attention. Please pay attention to this. I don't know who this person is, but Man of Leisure. Okay, Darla Spar just joined the chat room. I remember Darla because I signed her up. So I'm going to give Darla a huge shout out. I'm glad that you're in and you're banking. Shout out. Okay. Look at this guy, Man of Leisure, up $35,000 for the week. Not a bad week. I was going to work on a classic car today. God damn, Man of Leisure. Okay, you guys want me to show you that this is the chat. This is where everybody's posting. Value play, epic week. Value play, I'm in it to win it. Hell yeah, dude. Carlso the Flyer. I mean, who is this? Can somebody find out who is Man of Leisure? This man made 35 racks on the week. with Matt's trade ideas. Holy smokes there. I mean, shout out to this guy. Need to celebrate my losses like a win. So the consensus, all right. So, I mean, you see that, and this was right end of the week. Well, and you see Matt is posting as well there, right? Adding to the puts. Let's see what, I mean, these are the kind of messages that you'll see here, right? So I don't know how much the percentage was, but if you made $35,000, I mean, that it must have been a lot, percentage wise for that, you know, for that kind of win. Well, look at this one, Carlson the Flyer. Look at this one, Carlson the Flyer. Woo, just sold those TQQQ $53 calls I had that were flattening most of the day for a 150% gain. This and FXI were my only winning trades this week. And where do those trades come from? From the chat room, baby. Okay, so my suggestion, if your trades are not working, hey, just follow Matt because it looks like his trades are working. 150% gain on TQQQ, 17,000% gain on FXI. You guys wanted me to show you examples of real life people that are making real money. There you go. I mean, these are real people. Go in and talk to them. Be friends with them. Carl, I know Carlson the Flyer. I know Value Play. I know David V. I know all these people. I signed them up. And, you know, they're all really, really nice people. Very, you know, on the trading side, they want to make money. It's that simple. And that's what I'm telling you guys. If you want to make money, join Matt's chat room. It's that simple because he has his way of trading will give you that sort of percentage gain that you will not get with spreads or any of these other types of option trades. And you will certainly would not get it buying and holding stock, not even trading the stock. So you can do really crazy numbers here. So Carlson the Flyer, somebody else, 150% gain. Keep in mind, we're trading the Qs in and out. Okay. So let's see. Yeah, so we're always buying calls, buying puts, entries and exits. You literally can follow Matt to the minute, literally, to make sure, right, that like you're getting, see SQQQ, like the actual contract, the dollar amount. So entries and exits. So even if the market falls, you know, we probably in the chat room, very likely right now have puts on the market. So it doesn't matter really if the market goes up or down. We're really always in it, right? And as far as like right now, that FXI trade and the QQQ trades have already made us money. Look at this guy, Ram. I did buy some QQQ calls this morning at open and just sold that 200% gain. This is somebody else. This is not Carlson the Flyer. This is not the other guy that made $35,000 in it seems like to be in a week, $35,000. That's life-changing money. That's life-changing money for a lot of people. And look at Ram. He bought some QQQ calls this morning at open and he sold them for a 200% gain. Tell me how you're losing money in the correction and everybody in this chat room is banking. It's just about, it all comes down to the community that you're in. If you're trading in a pump and dump community, that's what you're going to get. And you might not know it is a pump and dump community, but I don't know. If it's some sort of Discord chat, I'd be suspicious or that kind of stuff. That's why this is a verified portal where there are only real human being traders, real traders that are trading their accounts, you know, no fake bots, no accounts, no advertisement, no spam, none of that stuff. Okay, this is following Matt Maley's trade ideas. And as you can see, I've already showed you like a ton of people that are making money here. All right. Yeah, Benny. All right, sounds good, Benny. We got to talk after this because I'm in the session right now, right? Rick, yeah, I'm not sure. He's probably sold and bought in. So, but I mean, the comments really speak for themselves. That's what you know what these people are doing. Kirsten, why am I not going in the chat before these last two, the two last good trades? Who says I'm not going there? I'm literally scrolling in order. So we're going to keep going through the chat room just to show you. Let's see what other people are saying. David V, let's go on the YouTube chat. Shout out to Richard Judge, bro. You know, we go hard here for the folks. David V closed them at 50 cents. Okay. Oh my God, David V, how much are you up? David V, I was throwing away, but let's see how much these people made. Geez, we just might make it to 355. Okay, what? Let's see, because we're scrolling back. We're going back in time here. So the farther back we go, we got to make sense of what they're talking about. But it's the QQQ. Marvel Technology, Costco, they're talking about all my safe stocks are down today. Okay, would make sense with the NASDAQ rally. Okay, we were trading the NASDAQ. Let's see what else. Darla on YouTube saying, Darla is in the chat. Okay, she's been in the chat. She's saying that you'll make your money back in a week. That's Darla. I know that anybody that joined last week and made that 14,000% gainer, anybody made money, unless you didn't take the trade, which why would you join and not take the trades? But you know, oh yeah, I forgot about, okay, Carlson says, I forgot about FXI. I made, okay, all right, let's, because I remember they were putting the percentage gains here, all these people. So I want to make sure that I can find that, but these people went wild and started taking a bunch. Okay, Pierre in Florida. Pierre in Florida. Yippee, my best week in over 4 months. Okay. These are real people, real traders. David V says, congrats, Pierre. I also had a great week, but it's easy to relate to those who didn't. We've all been there. Yep, there you go. Absolutely. So Pierre had a great week, his best in 4 months. Damn, and the people that didn't buy the calls on FXI are well, I mean, it is what it is, right? You know, like that's why you're in the chat room there, right? So let's see what else we can find here. So keep in mind, this is where everybody's posting, right? All the members. The other chat room is where Matt is posting the entries and exits, things like that. So, I mean, there's a lot of market conversation. It's really hard to filter through everything here, but because I'm just doing this out of the blue right now, like today on a Sunday. So yeah, I mean, you can see that this is basically where Matt is, you know, posting. This is where everybody in the chat room is posting whatever they want to talk about. If you go to Matt's important messages, that's where you're going to see basically the entries, the exits, all that sort of stuff that he's buying. I sold you, and right here you're looking at the when he's selling, right? I sold the rest of my FXI March $18 calls. So you get all the entries, you get all the exits there, guys. It's pretty straightforward. You know, that's really how you have to follow, you know, how you have to follow the alerts, right? He gives you a clear entry, he gives you a clear exit, and really that's really the best thing you can do, right? Because even if you have a full-time job, right, you really want just the information that you need to make the trade. Entry, exit, market update, that's it. So guys, if there's no other questions, just want to say this here one last time, folks. This is a 90% off deal. It's going to expire at midnight. If you don't get it by midnight, I'm very sorry, but you're not going to be able to get this price again. This is just for St. Patrick's. So keep in mind, we are closed today. The office is closed on weekends. So I'll do my best here to get, you know, back with you guys here by email as best as I can. And once you join, make sure that you pop into the chat room. You start looking at the actual calls, trade ideas that Matt has already put and placed so that you can actually get an idea and you get a sense of what is going on in the markets. I got to give a lot of shout outs here as well, though, for a lot of people here. Actually, let me just pull this up really quick, folks. It's been an amazing session. Absolutely, guys. I know Matt's the bomb. Absolutely. He kills it every time. Okay, so we have to give a shout out here to Lucas Fabry. Shout out, man. Shout out as well to Tom Smith and VL. Shout out, welcome. Welcome to the family. Welcome to the family. Okay, guys. So I'm going to show you guys really quick how to get into the chat room at the end. We're covering a couple basic things here. So you have to make sure to stay here a couple more minutes if you just want to go over this really quickly. That way I can save you guys a lot of time and save myself some time as well. So the link to join, guys, is in the chat, and I'm also posting the contact if you have questions, if you want to reach out. So once you join, you will get a welcome email, and then from there you will be it will pretty much give you like an email on where to click on how to get to the portal. Pretty straightforward, guys. So this is the chat room again, guys. If you have any questions, reach out by email. I'm going to put the contact, and I'm going to put the actual Palm Beach Building Company just signed up. Shout out, brother. Great stuff, man. Good to see you. Let's go, baby. St. Patty's special. St. Patty's special today. So, guys, great being here with you today. Great session with Matt as well. Shout out to all the members here, the OGs that have been here with us since we started this chat room. It's been an amazing, amazing ride here for everybody. So if you have questions, contact me in the chat. If you want to join, you can use the link. It's only going to be available till midnight. Afterwards, it's expired, and you will never be able to get into that price again. So do it while you still have it there really quick. If you do, once you join, you will get the actual link to go into the portal, guys. And then pretty much it'll take you to this page. You click stock picks, inner circle chat room, and it takes you right there to the chat, guys. So any questions, guys, just email. Thanks for coming up. Good seeing you guys, and have a great week. We'll see you guys next time. Hey guys, have to come back really quick. I forgot. I have to give a huge shout out here to Nancy for joining the Stock Picks Inner Circle chat room. Welcome to the fam. Welcome to the fam, Nancy. Good to have you here. Now, with that, I guess now we can officially wrap this up as an amazing and the best session since Nancy's part of the crew here now. So I will see you guys in the chat room. Don't forget, pop in there, and any questions, email. And we'll do our best here to get to with you today, but shout out here for all the members. Welcome, and we'll see you guys in the chat tomorrow.